Good morning, everyone. Welcome to RHB Investment Bank's Thematic Conference. Before we kickstart today's event, let me take you through some administrative notes first off. This forum is CPE accredited, and to qualify for the 5 CPE points, please complete the evaluation form at the end of the webinar. You will also have to pass the assessment test with 100% passing mark by the 5th of November 2021 before 11:59 p.m. We will also have a Q&A session towards the end of our event today. So if you would have questions for us, please type it out in the chat tab that you will see at the bottom of your screen. If we are unable to answer your questions due to time constraints, please get in touch with your RHB representatives and they'll be more than happy to assist you. Towards the end of the event, you will see a poll being flashed up on your screen. We would appreciate it if you could please take the time to answer the 3 questions so that we may gather your feedback and further improve our future events. Yang berbahagia Datuk Karo Saleh Ramli, Group Managing Director and Group Chief Executive Officer, RHB Banking Group. Mr. Ganesh Sabaratnam, Managing Director and for Investment Bank, RHB Investment Bank Berhad. Esteemed panelists and moderators for our event today, Puan Azura Azman, Head of Group Wholesale Equities, RHB Investment Bank. The ESG Committee who has helped make this event a reality, and other senior management from the RHB Banking Group joining us today. Distinguished guests, ladies and gentlemen. Good morning, everyone, and thank you all for joining us today. I'm Nivina, your MC for today's webinar, and I'm honored to welcome you to RHB Investment Bank's Thematic Conference, When Shariah Meets ESG. Environmental Social Governance, ESG, and Shariah investing have a common goal to promote social good through capital allocation despite different screening criteria. Today, our esteemed guest speakers will deep dive and explore topics like how do the worlds of Shariah and ESG investing converge? And what can we do to advance the ethical agenda in both worlds? During the segment with the panel speakers later on, we will be discussing a myriad of topics and they will be sharing their expert perspectives on both Shariah and ESG finance on the upcoming trend of ESGI, which is one of the fastest growing segments where Shariah meets ESG. So as you can see, our event today is set to be a highly informative and insightful one. And now, ladies and gentlemen, without further ado, it is my great pleasure to invite Yang berbahagia Datuk Karo Saleh Ramli, Group Managing Director and Group Chief Executive Officer of RHB Banking Group, for his welcome address. Over to you, Datuk.
Thank you, Nabina. Assalamualaikum and very good morning to all. I'm pleased to welcome all of you, as well as our distinguished speakers to our virtual RHB ESG thematic conference with the theme When Shariah Meets ESG. A special welcome also to our guest panelists yang berbahagia, Datuk Muhammad Umar Swift, CEO of Bursa Malaysia, Cik Nur Aizat Sheikh Ahmad, Deputy Director, ICM Product Development, Securities Commission, Dr. Muhammad Daud Bakar, Founder and Executive Chairman of Amani Group, Professor Dr. Muhammad Akrab Laldin, Executive Director, International Shariah Research Academy for Islamic Finance, or ISRA, Puan Shariah Shahrudin, President Satuna Sdn Berhad, and Cik Zakaria Osman, our moderator. Joining us today are local and foreign fund managers, buy-side analysts from insurance companies, private asset management companies, and unit trust companies, representatives from GLICs, as well as reps of pension funds from Malaysia and Southeast Asia region. Our ESG conference is meant to be interactive, which we hope will facilitate the sharing of insights on the current landscape and further generate deeper discussions on Shariah and ESG convergence in Malaysia. Ladies and gentlemen, in recent years, we have witnessed Shariah as well as ESG funds growing and gaining prominence, translating into tremendous growth in assets under management. While ESG investing and Shariah compliant investing share similar objectives and have a natural affinity, where both promote stewardship and societal value creation, the two strategies are often viewed as distinctly separate approaches by investors. We are now seeing wider and more pronounced shift in mindset, bringing into focus the various opportunities that lie within the convergence of Shariah and ESG. And in recent years, it has become more and more evident that ESG is being further integrated into investment strategies, as well as the evaluation and decision-making process. Whereas in the Islamic finance industry, a paradigm shift is underway. Islamic fund managers are expected to find new ways to further differentiate their product offerings, one of which is by incorporating ESG screening methodology. By bringing together sustainable and Islamic investing, much can be done to invigorate conventional strategies and build a more sustainable investing environment. With the impressive 41% growth amounting 225 billion ringgit in Shariah ESG funds in Malaysia over the past 3 years, investors increasingly look to align these two important principles together for greater portfolio diversification and as an alternative to more traditional ESG investments. Ladies and gentlemen, with the convergence of Shariah funds and ESG, while the convergence of Shariah funds and ESG is still at an early phase, Malaysia is on the right track towards meeting the financial community's sustainable investment needs, which includes Bursa Malaysia's recent launch of the FTSE for Good Bursa Malaysia Shariah Index in July 2021. We believe that this makes it an opportune time for us to facilitate deeper engagement between relevant stakeholders, regulators, practitioners, and investors in bringing to light how Malaysia can leverage in capturing the strong growth potential for ESGI and help you navigate toward the most optimal risk-reward decisions. So let me not hold you any longer. I will now pass the floor back to the MC, Nabina, and I wish everyone a fruitful and insightful discussion on ESG and Shariah investing. Thank you. Stay safe. Assalamualaikum.
Thank you, Dato'. Ladies and gentlemen, our special guest today wears the hat of a regulator, market operator, and business. He led the team that achieved the record results at Bursa Malaysia for financial year 2020 and the first half of 2021, as well as the Malaysian equities market. He has a varied background beginning in Pricewaterhouse Melbourne, then moving on to banking, and was then entrusted to build the reticulated gas network in Peninsular Malaysia. No stranger in the financial industry, he has also successfully led teams in insurance, banking, takaful, and now in capital markets. Today, he is here to talk about moving the dial on sustainable business practices. He is also a keen open water swimmer. He is the CEO of Bursa Malaysia, Dato' Muhammad Umar Swift.
Yang Berbahagia Datuk Khairul Saleh Ramli, Group Managing Director and Group CEO of RHB. Distinguished panel of speakers, ladies and gentlemen. Let me begin by thanking the RHB Group for giving me the honour to deliver the keynote at today's ESG Thematic Conference, when Shariah meets ESG convergence. I must commend the RHB Group for their ongoing proactive effort in driving sustainable development within the banking space. Today's theme is indeed timely, as we are seeing growing opportunities for Shariah investment to capitalise on increasing popularity of sustainable or ESG investing, given the overlap between Shariah and ESG principles. The COVID-19 crisis has exposed the fragility of our economic systems and accelerated the need for more sustainable approach to financing and investing. In recent years, ESG investing has become more mainstream, due to increased awareness of the consequences that investments can have on people and environment. The present momentum observed in ESG investing is remarkable. ESG investing, which was once considered a niche, is rapidly expanding across all geographies. Assets identified as adhering to ESG principles may soon account for 44% of global assets under management. Based on the Sustainable Investment Review 2021, global ESG investments increased 3.5 times over the last decade to $35.3 trillion. This is an equivalent to a compound annual growth rate of 13.5%. In contrast, the total assets under management of the Islamic funds globally recorded a growth of 31.9% in 2020. Malaysian Shariah funds stood at 228 billion ringgit as of August 2021, accounting for 1/4 of 969 billion ringgit under management in Malaysia. Ladies and gentlemen, ESG investing and Shariah compliant investing have been two fastest growing investment approaches in recent years. While ethical investing is a broad approach that can mean very different things to different people, Shariah investing, on the other hand, is clearly defined and regulated with clear guidelines based on acknowledged Shariah principles. Although ESG investing and Shariah investing may seem unrelated, there is a high degree of overlap between the two approaches, as they share a focus on ethical considerations and social responsibility. For instance, Islamic finance calls for justice, empowerment of all stakeholders, ethical practices, and social responsibility, notions that are at the heart of ESG efforts and initiatives. And as sustainability and the Islamic finance industry continue to grow in the coming years, there is a unique opportunity for ESG and Shariah investing to converge and drive sustainable investments globally. Recent Deutsche Bank GSIA analysis suggests that by 2036, close to 100% of funds will have ESG mandates, with an expected value of some $160 trillion. Closer to home, the growth in value-based investing presents a unique opportunity for Islamic finance. This is due to the shared principles of both ESG and Islamic capital raising approaches. Over the last decade, Malaysia has witnessed the launch of innovative structures that are aligned with sustainability and ESG efforts. They include the Sustainable and Responsible Investment Sukuk Framework introduced by 2014 by the Securities Commission Malaysia, Khazanah Nasional Berhad's first social impact sukuk, and Bank Negara Malaysia's Value-Based Intermediation (VBI) strategy white paper introduced in 2017. Further, there is an abundance of data that indicates that ESG investing has provided comparable returns and in many cases better financial returns than conventional investments. Despite the market's recent downturn triggered by the COVID-19 outbreak, most ESG assets have outperformed their non-sustainable counterpart, and this trend is likely to continue. Similarly, Islamic finance principles have also aided the economy in responding to crises such as COVID-19. The risk-sharing nature of Islamic finance has considerable merit, particularly in light of adverse effects of debt and leverage on the economy. This is evidenced by the better performance of Shariah-compliant equities against comparable conventional equities during the said crisis, even though Islamic financial industry's overall performance being relatively equal to that of the conventional industry. The similarities between the principles of ESG and Shariah investing open a wider choice for investors looking for opportunities in the broader socially responsible investment space. Shariah investing, much like ESG investing, promotes responsible behavior and appeals to investors seeking products that advocate ethical investing due to the selection criteria for the underlying investment. Investors who are concerned about ESG factors in their investments or are choosing to focus on ESG investing can consider Shariah funds as an alternative, as Shariah funds can be classified as an ESG-based investment. The convergence of these two approaches has the potential to boost the expansion of sustainable and ESG investments across multiple Islamic finance asset classes, as well as the financial industry at large. Ladies and gentlemen, Bursa Malaysia is proud to be a global leader in Shariah listings and investments. Among the many achievements we've been recognized for, Bursa Malaysia has been named the best stock exchange for Islamic listings by Islamic Finance News in 2018 and 2019. Bursa Malaysia I. The exchange's end-to-end Shariah-compliant investing platform is supported by 16 Islamic brokers and provides both faith and ethically based investors with access to a broad range of opportunities in our marketplace. As of September 2021, 748 out of 947 listed companies on the exchange, or 79%, are Shariah compliant. Shariah market capitalization makes up 69% of the total market capitalization of 1.8 trillion ringgit. And the average daily trading value of Shariah compliant securities makes up 79% of the overall average daily volume of 3.9 billion ringgit. we continue to observe our Shariah indices consistently outperforming its conventional counterparts over the last 10 years. For example, the FTSE Bursa Malaysia Hijrah Shariah Index, comprising of the 30 largest Shariah-compliant companies on the FTSE Bursa Malaysia IMAS Index, has surpassed the FTSE Bursa Malaysia KLCI and FTSE for Good Bursa Malaysia Index, growing by 22.1% between 2010 and September 2021. These facts serve to suggest that Shariah-compliant investments are an attractive source of value for investors. Further, we recently launched the FTSE for Good Bursa Malaysia Shariah Index to meet the financial community's sustainable and Shariah-compliant investment needs. This new themed index is designed to track constituents in the FTSE for Good Bursa Malaysia Index that are also Shariah-compliant. Thus, this FTSE for Good Bursa Malaysia Shariah Index meets both universes of requirements. The FTSE for Good Bursa Malaysia Shariah Index comprises of 54 constituents and will serve as a basis for fund managers to develop new investment products comprising a portfolio of Shariah-compliant equities guided by sustainable investing principles. In addition to the ESG-related indices I have mentioned, we're increasing our efforts to work with our strategic partners to promote sustainable practices and enhance sustainability practitioners' competencies. Ladies and gentlemen, the increasing convergence of values and principles between Shariah-compliant investing and ESG investing will help catalyze growth for the Islamic finance industry and provide enormous opportunities for investors, companies and intermediaries. It will spark the interest of investors who are more concerned about societal and environmental issues. This will lead to an increase in sustainable and ESG investments across diverse Islamic finance asset classes, resulting in overall financial industry growth. In addition, socially responsible investing with Islamic proposition brings the added advantage to the economy and society as a whole. They include reducing uncertainty and leveraging levels in the business community, maintaining stability by removing businesses based on speculative ends, and promoting sustainable businesses and investment activities that entail positive results with stable prospects and the welfare of societies. Choosing investment activities that are anchored on Shariah and characterized by long-term, socially responsible perspectives build a greater stability and ensure our nation's socio-economic well-being. We believe this will significantly widen the appeal for Shariah investing. Ladies and gentlemen, Islamic finance is no longer the domain that caters to Muslims only. Globally, it has grown to be a $3 trillion industry. The potential for Islamic capital market remains promising, not only in Malaysia, but also internationally. In this sense, the Malaysian Islamic capital market indeed has much to offer. It boasts a resilient financial system and an innovative ecosystem that is accessible globally, as well as a supportive government on initiatives that can strengthen the country's proposition as a global Islamic finance hub. On the back of these prospects, Bursa Malaysia will continue to develop the Islamic capital market by enhancing its Shariah-compliant product and service offerings through continued product innovation and strengthening of the ecosystem. Before I end, I would like to thank all participants for joining us today and the RH Group for having me to deliver today's keynote. I'm confident that today's lineup of experts will enhance your understanding of the convergence of Islamic and ESG investing. On that note, I wish everyone a very productive and impactful conference ahead. Thank you.
With that, ladies and gentlemen, the RHB Investment Bank's Thematic Conference, When Shariah Meets ESG, has now been officially launched. Next up, it gives me great pleasure to invite our next speaker for today, Mr. Alexander Chia, Head of Regional Equity Research, RHB Investment Bank Berhad, who will be presenting on the top 5 ESG and Shariah stock picks. Over to you, Mr. Alexander.
Dr. Karusali Ramli, Group Managing Director, RHB Banking Group, esteemed speakers, senior management from RHB Banking Group, valued clients, distinguished panelists, fellow colleagues, ladies and gentlemen, a very good morning to everyone. I hope you will find the topic of today's corporate day relevant, given the increasing emphasis on ESG principles, coupled with Bursa Malaysia's robust Shariah investment credentials. You will recall back in October 2020, when RHB was a pioneer in the implementation of in-house ESG evaluation, as opposed to third-party source scoring, based on a proprietary 9-factor assessment of the 3 E, S, and G pillars. Most recently, RHB was again a trailblazer by beginning the process of integrating our proprietary ESG scoring methodology into our stock valuations to ensure that our ESG assessment is directly linked to how we ultimately value each stock under coverage. As you are aware, a company's Shariah status is binary. One is either Shariah compliant or not Shariah compliant. However, a company's ESG profile may have different shades of color. Some are brighter and some are duller. And to ensure today's topic of discussion is relevant and actionable, we have put together a list of stocks that have the combined attributes of being Shariah compliant with a high ESG score based on our RHB scoring methodology, as well as enjoying a buy recommendation. We also have a more comprehensive list of 10 Shariah ESG scores stocks that are available to clients upon request. But allow me over the next couple of minutes to run through our top picks in this space. First up, Mr. DIY. We like this company for its gravity-defying growth, notwithstanding the challenging business environment. We project the company to chart a 3-year net profit CAGR of 27% going forward, underpinned by outlet expansion, established brand equity, and proven business model. There is a scarcity of large cap consumer stocks that offer such growth prospects, and we believe that the valuation premium is warranted. Our target price of $4.59 is derived by factoring in a 4% ESG premium to the intrinsic target price of $4.41. The group is focused on improving, managing, and optimizing its energy consumption to mitigate the impact on the environment. And meanwhile, Mr. DIY has committed significant resources to social causes and has been active in community engagement and investment. Lastly, the company is transparent in disclosing key information of the business in a fair manner and also has a good mix of independent directors on its board. Next up is Sunway. Sunway Group is a strong advocate of ESG practices in its business model. The group commits to aligning ESG practices with internationally renowned 17 United Nations Sustainable Development Goals. In a landmark development, the UN SD Solutions Network Center in Asia will be housed in Sunway City, reinforcing Sunway's commitment to advancing the SDGs in the Asian region. Over the years, Sunway has made various donations to the underserved communities in the B40 group, people with disabilities, youth, women, children, and senior citizens. 56% of its board members are independent, and Sunway has in-house investor relations teams that is easily accessible. Sunway City, which is Sunway Berhad's flagship integrated township, is a GBI certified township. The company has also successfully grown its other business divisions such as property investment, construction, healthcare, and quarry, which significantly enhances the resilience in its business operations. Based on our in-house proprietary methodology, we derived an ESG score of 3.4 for Sunway, and our current SOP derived TP of 2 ringgit, which is yet to incorporate an 8% ESG premium, which we will be factoring in due course. Thirdly, Press Metal. The company's timely expansion in the capacity and vertical integration places the group in a strong position to capture growth as market prices across the aluminum value chain in 2022 continues to rise. Our SOP-derived TP for the stock has been revised upwards by nearly 6% to reflect our in-house ESG score of 3.3, well above the country's median rating of 3.0. This is on its credentials of having amongst the lowest carbon footprint in the primary aluminum industry, paving the way for opportunities in the green aluminum market, as well as observing sustainable governance practices in terms of corporate reporting, accessibility, board independence, alongside long-term commitment to address carbon neutrality. Next up, freight management. Freight management should see a strong rebound in throughput, supported by rebound in post-pandemic global trade flows and ongoing customer acquisition, leading to higher volume growth. Profitability will further improve through the streamlining of underperforming operations, enhancement of its client portfolio. Our in-house ESG score for freight management is 3.3. The highest score is due to them placing strong emphasis on occupational safety and health, as freight management has maintained 0 incidents of workplace-related injuries since financial year 2016. Moreover, FMH's management is transparent, and the group adheres to the FTSE for Good Bursa Malaysia, as well as Global Reporting Initiative sustainability reporting standards. And finally, on our list of topics in this space, Inari Amatron target price of 435 is derived after applying a 2% ESG premium. We like the stock as a primary proxy to the proliferation of 5G. Inari will see sustainable earnings growth on its track to deliver another record year in FY22, given the rising adoption of 5G smartphones and growing RF content. The company is in a net cash position and is a top pick for our technology sector. Inari has applied and adopted the majority of the best practices of the Malaysian Code on Corporate Governance and has taken active steps to manage its environmental risks and implemented several energy efficient projects to mitigate greenhouse gas emissions. Water management efforts are also made to reduce water usage. And in terms of the social pillar, we see no concern over the treatment of its migrant workers as they continue to uphold high SOPs and complies with all applicable labor laws in the countries. Inari also adopts a stringent occupational safety and health policy to minimize occupational hazards. Without much further ado, allow me to pass the time back to Navina to introduce the next segment of the program.
Thank you, Mr. Alexander. Next up, ladies and gentlemen, let's watch a quick video from Bursa Malaysia.
Shariah investing, SRI, and ESG issues. ESG and ESG issues. Environmental, social, and governance are modern expressions in financial services that best captures the impact of financial practices on society and environment. See examples of ESG issues. 1. Environmental issues. Water pollution, air pollution, biodiversity, climate change, deforestation. 2. Social issues. Data protection, diversity, employee relations, government relations, community relations. 3. Governance issues. Board composition, accounting standards, anti-competitive behavior, bribery and corruption, compliance. Shariah investing, SRI, and ESG issues. Is there an alignment? In this regard, SRI investing and Islamic finance align in their tendencies to consider impact on society and the environment. Next, we explain ESG issues and how they are considered within the context of SRI investing and Islamic finance. Shariah investing and ESG issues. Shariah investing partially addresses ESG issues through its exclusionary screening. For an investment to be Shariah compliant, it must avoid all activities that Islam prohibits, such as business built on riba, excessive gharar, alcohol, pornography, or gambling. In this regard, conventional banking, insurance, breweries, casinos, and providers of adult entertainment are excluded. However, ESG and SRI principles generally apply positive screens. That is, they pass companies that have contributed to social impact, besides excluding those that do not. Both screens are unlike Shariah screening in that existing Shariah screening is based on negative or exclusionary screening. That is, they remove companies that violate Shariah rules. Shariah screening is evolving to include positive screens. SRI and ESG issues. SRI investing uses at least 6 methods to consider ESG issues. 1. Exclusionary screening. refers to avoiding securities of certain companies based on traditional moral values and standards. 2. Active ownership refers to the practice of dialogue with companies on ESG issues and exercising both ownership rights and voice to effect change. 3. Impact investing refers to investing with the disclosed intention to generate and measure social and environmental benefits alongside a financial return. 4. Best-in-class selection refers to preferring companies with better or improving ESG performance relative to sector peers. 5. Thematic investing refers to investing that is based on trends such as social, industrial, and demographic trends. 6. ESG integration. The systematic and explicit inclusion of ESG risks and opportunities in investment analysis.
Ladies and gentlemen, before we move on to the panel Q&A session, just a gentle reminder that we will have a Q&A session towards the end of our event today. So if you have any questions for us, please type it out in the Q&A tab that you will see at the bottom of your screen. If we are unable to address your questions or if you have follow-up questions for us, please get in touch with your RHB representatives and they'll be more than happy to assist you. Now, ladies and gentlemen, we have moved on to the next item on our agenda, and I will hand over the session to our esteemed moderator for today, Encik Zakaria Uthman, Head of Big Data Management, TFX Islamic Sdn Berhad. Over to you, Encik Zakaria.
Thank you, Ms. Navina. Bismillah ar-Rahman ar-Rahim. Alhamdulillah Rabbil Alameen wa salatu wa salam ashrafil anbiya wal mursaleen wa ala alihi wa sahbihi ajma'in. رب اشرح لي صدري ويسر لي أمري واحلل عقدة من لساني يفقهوا قولي أما بعد. Distinguished guests, ladies and gentlemen, Assalamu alaikum wa rahmatullahi wa barakatuh, and a very good morning to all of you. Once again, welcome to RHB Thematic Conference in collaboration with Bursa Malaysia, and today's interesting topic is When Sharia Meets ESG. Firstly, let me thank RHB for bringing me back on stage to moderate and to discuss this timely topic. We are indeed fortunate to have with us today distinguished panel speakers whom I strongly believe need no detail or further introduction. Ladies and gentlemen, Islamic finance and ESG investing are basically complementary approaches with many shared values, many shared principles such as being good steward to society and the environment. And with many more similarities than differences, both offer products that serve Muslim and non-Muslim investors alike. And more importantly, both possess strong practices and policies that each can learn from the other. The recognition of this alignment is at the heart of the Securities Commission's initiatives in sustainable financing, which the regulator embarked on in 2014 with the issuance of its Sustainable and Responsible Investment Sukuk framework. And as you can see, since then, there has been significant traction in this space. Malaysian issuers have issued the highest number of sustainable Sukuk, which include an issuance size of 5.2 billion ringgit, a total of 11 Sukuk as at December 2020. And ladies and gentlemen, to learn more about these initiatives, I'm pleased to call upon Mr. Noraizat Sheikh Ahmad to give a short presentation on how SC facilitates sustainable financing. Over to you, Noraizat. Noraizat?
Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh, and good morning to all. Yang berbahagia Datuk Karai Saleh Ramli, my respected moderator, Encik Zakaria Osman, respected panelists, Yang berbahagia here Datuk Dr. Muhammad Daud Bakar, Professor Dr. Muhammad Akram Landin, as well as Puan Shariah Saharuddin. First of all, I would like to take this opportunity to thank RHB for inviting the SC at this conference. It is indeed a pleasure for us to be sharing the stage with the other esteemed moderator. The theme for today, as mentioned by moderator, is When Shariah Met ESG, and we are given about 15 minutes to actually speak on any topic. I thought it would be good if we could actually share our experience in developing the sustainable financing space within the capital market, how SC has been facilitating SRI, and how we have actually been harnessing the synergy between Islamic capital market as well as SRI. Next slide, please. Our capital market is well positioned to actually take advantage of the growing interest in sustainable financing. Given Malaysia's leading position in ICM, give us an advantage in attracting SRI funds and to be a regional center for SRI. Given that ICM principle are aligned to the principle of sustainable investment. Malaysia continue to be a prominent global ICM hub and a leader in global Sukuk outstanding and issuances in 2020. Shariah compliant assets actually mounted to 2.3 trillion ringgit at the end of 2020, having grown from 1.1 trillion in 2010. Malaysian Sukuk outstanding more than tripled in the size on the back of facilitative developmental policies. Islamic AUM meanwhile grew 7.7 times, underpinned by initiatives that has been carried out throughout the 10-year period. In this regard, I guess we are in the position to actually take advantage of that leadership in Islamic finance as far as attracting SRI investor as well as SRI fund. Second point is on we are the third largest global currency bond market as a percentage of GDP in Indonesia, and being a regional hub will increase the attractiveness of the Malaysian bond and Sukuk market to a new category of value investor as well as issuer. And the third point is Malaysia has an established equity market, and SRI product will actually widen the range of listed product available in the Malaysian capital market. And the final point is that more and more institutional investors are aligning their financing goals with sustainable economic growth by integrating social and environmental consideration into the investment and business decision-making processes. Therefore, there is effective linkage to the capital market in terms of taking advantage of the growing interest in SRI. Next slide, please. I mean, the SC has always emphasis on SRI in its developmental agenda. In fact, SRI was first identified as a key priority in the Capital Market Master Plan 2, which was actually launched in 2011. One of the first initiatives was the introduction of the SRI Sukuk Framework in 2014, as mentioned by Encik Zakaria. This is widely recognized as a pioneering regulatory-based framework which formally integrates the principle of Shariah as well as SRI. The framework is very unique in that it recognizes Waqaf asset as one of the eligible SRI projects. Several other initiatives were introduced in 2017. The first is the launch of the Islamic Fund and Wealth Management Blueprint in January 2017, which actually contained 3 strategic trusts, one of which is to establish Malaysia as a regional center for Shariah compliant SRI. This initiative was followed by the release of the SRI Fund guidelines to facilitate and encourage greater growth of SRI funds in Malaysia. At the same time, the SC also introduced the 5I strategy, which is basically to develop the SRI ecosystem, investors, issuers, instrument, internal culture, governance, as well as information architecture. Another milestone in the launch is the launch of the SRI roadmap in 2019. This is a 5-year roadmap, comprises 5 overarching strategies built upon the 5 I's in terms of widening the range of SRI instrument, increasing the SRI investor base, building a strong SRI issuer base, instilling a strong internal governance culture, as well as designing information architecture in the SRI ecosystem. The recommendations contained in the SRI roadmap are aimed at driving the development of a vibrant ecosystem for Malaysia, as well as for the region. These strategies serve to expand the range of SRI instrument, issuers, investor, and ancillary services, while strengthening disclosure and governance by drawing synergies from our existing global leadership in the closely aligned field of Islamic finance. In 2020, we launched our Wakaf Featured Framework, Wakaf Featured Fund Framework, which is another milestone in the development of the sustainable financing. These are not the only initiative that we have undertaken. Over the years, there are many other initiatives taken by other parties as well, such as Bursa, by introducing the sustainability framework and introducing the FTSE for Good index as well, and recently the Shariah ESG index. And Malaysia also through our involvement in various collaboration to the SRI ecosystem. At the ASEAN level, the SC jointly led the ASEAN Capital Markets Forum, ACMF, Sustainable Finance Working Group to develop ASEAN Green Bond Standard, which was released in 2017, ASEAN Social Bond Standards in 2018, as well as ASEAN Sustainability Bond Standard in 2018 as well. At the global level, the SC is a member of the ISO Sustainable Finance Task Force, which seeks to improve the comparability of sustainability-related disclosure, as well as cross-border regulatory and supervisory coordination. Domestically, both the SC and Bank Negara Malaysia kicked off the Joint Committee on Climate Change, or JC3, with industry players to accelerate climate action through the financial sector. Centers of Excellence on Sustainability on PLC, financial intermediaries, and investor respectively were also established by Capital Markets Malaysia, our affiliate, together with strategic partners to enhance the SRI capabilities among several stakeholders. Next slide, please. And of course, the ICM has been a strong catalyst for sustainable finance, given the common underlying principle. Innovations such as SRI Sukuk, Wakaf share offerings through IPO, and Wakaf Featured Fund have demonstrated how ICM can actually facilitate the intermediation of capital formation for commercial purposes, while also contributing to positive outcome for the environment and society. Notably, the SRI Sukuk framework facilitated the first issuance of social sukuk in 2015 to fund trust school, and the first green sukuk out of Malaysia in 2017. These were followed by increased volume SRI sukuk issuances, comprising projects that include solar photovoltaic power plants, green buildings, hydropower, and affordable housing. For the Wakaf segment, the offering of Wakaf shares structure under a social enterprise model was the first of its kind globally. Dividends from the Wakaf share were utilized to subsidize rental rates for selected tenants, as well as for small shops lot for single mothers and lower income group. This innovative instrument initiative of ICM is consistent with social aim of reducing inequality. The SRI funds framework was also part of our initiative to broaden the offering of ICM product, to widen the range of SRI product and attract more investors in the SRI segment. The fund would include unit trust fund, real estate investment trust fund, exchange traded fund, as well as venture capital and private equity funds. To date, we have 12 Islamic SRI fund, 10 unit trust fund, as well as 2 wholesale fund, out of a total of about 30 SRI funds. While the Sukuk market has been instrumental for Shariah compliant fundraising, it predominantly caters to listed and or large corporation. Therefore, in reaching out to the broader stakeholders of the economy, there is a need to actually expand beyond traditional assets and market. And as part of the efforts to enhance financial inclusion for the economy, the expansion of ICM into alternative fundraising avenues via fintech will be crucial to create more opportunities for mid, small, and medium-term enterprises and enable participation by more investors, both of which are significant stakeholder of the economy. Initial effort has been the issuance of the Shariah Screening Assessment Toolkit. This is basically a guidance in screening the Shariah status of unlisted MSMEs for our equity crowdfunding, as well as peer-to-peer financing platform operators, as well as Shariah Advisor. With the release of the Shariah Screening Assessment Toolkit, it enables more diversified Shariah compliant investment portfolio across asset classes and economic sector as well. Next, please. And of course, recently we have just launched our Capital Market Master Plan 3, and we will continue to pursue the SRI agenda and how we can further harness the synergy between SRI and ICM. If you look at if you have read the CMP 3, we see a lot of movements to actually preserve the interests of climate and society, which are actually in line with Maqasid al-Shariah, which promote the attainment of benefit and prevention of harm for the people Therefore, by promoting greater alignment with Maqasid al-Shariah, Islamic capital market can actually foster a more sustainable and responsible capital market ecosystem. This will enable ICM to play a greater role in facilitating SRI growth in the economy. Moving forward, ICM offering will continue to be expanded to better support the needs of the stakeholder of the economy. One key area of focus will be Shariah compliant funding needs of MSMEs, especially in the halal sector, and Shariah compliant SRL. Along with the growing interest to invest responsibly, effort will be made to enhance investor access to Shariah compliant companies with good ESG practices. This will encourage companies to take into greater consideration the needs of broader stakeholders, including people or communities and the environment. This is expected to further elevate the socially responsible and ethical value of Shariah compliant companies. I think in this regard, guidance will be provided to incorporate Shariah requirement and ESG standard for investors seeking such investment, as well as companies aspiring to adopt ESG practices. This guidance will leverage on existing Shariah compliant Shariah screening methodologies and internationally recognized positive screening methodologies available in the market. For greater impact to the social economic development in Malaysia, the LC will explore greater use of the ICM framework as a reference point and its product and services as funding sources for further development of the Islamic social finance sector. The key objective is to alleviate hardship among the underprivileged population within the Islamic wealth management, as well as the distribution system. Today's sources of funding for Islamic social finance are enabled by capital market instruments such as SRI Sukuk and Wakaf Featured Fund. So those are basically some of the initiatives that we will undertaken over the next 5 years under our Capital Market Master Plan 3, which was recently launched. I suggest perhaps all the participants could actually refer to the Capital Market CMP3 to actually find out more details about all our initiative. You can get a copy of the CMP3 on our website. With that, ladies and gentlemen, thank you very much.
Thank you, Nuraizat. I'm impressed with with all those initiatives, especially when SC has started to basically look into the MSMEs. Okay. Ladies and gentlemen, as I mentioned earlier, Islamic finance and ESG investing are distinct approaches that have many similarities. the cultural, the religious differences that separate them require unique products and services that will reflect the faith and values of the investors in the products. Although they will remain separate investment approaches, Islamic finance and ESG investing are still, I would say that they are basically converging. This is not surprising given the origins of each investment approach and the common underlying principles. A deeper understanding of Islamic finance and ESG investing by all investors and the increasing materiality of the social and environmental issues will likely to continue this trend towards the use of common techniques and analysis. Said that, please welcome Dr. Muhammad Daud Bakar to talk on the macro view on the direction of Sharia and ESG investing. Tafaddal, Dr.
Bismillahirrahmanirrahim. Alhamdulillahi Rabbil Alameen. Wassalatu wassalamu ala khatamil anbiya'i wal mursalin Sayyidina Muhammad sallallahu alaihi wasallam. Thank you, Mr. Moderator. Yang berbahagia Datuk Khairuddin Saleh Ramli, all the esteemed panelists, Professor Dr. Akram, Encik Nur Aizat, and Puan Shariah, and all esteemed learned audience and participant of this important event of trying to infuse and embed Sharia investing with ESG or vice versa. I'm both humble and honored to be given this opportunity to talk on the micro view on the direction of Sharia and ESG investing. So there are at least 4 keywords I need to touch upon, and these are the direction, the Sharia, the ESG, and the investing, perhaps MO, modus operandi, as we progress further. And before I do that, allow me to put on record my sincere and profound gratitude and thanks to the organizers, RHB, for first and foremost to put this program across so that we can always continuously talk and discuss and articulate the very essence and meaning and importance of this new theme of investment, not for us, the financial sector, but to save the world and to make the world a better place and a more refined society free from any corruption, from any unethical conducts, from the governance perspective, from the E perspective, environment driven initiative, and the social, the welfare of human, because the key pillar of this planet is human. If human is not well respected, there's no meaning of development of the world. And the second, for inviting me and my other colleagues, esteemed panelists, to share our perspective. And we look forward to a very interactive and perhaps insightful and provocative perhaps issues and outstanding issues in the market as we try to converge between Sharia and ESG. Sometimes we try to be a bit diplomatic, but sometimes we need to be a bit open, a bit honest in our articulation, which I think we intend to do in the next session after the presentation of each and every panelist. Direction, or perhaps the micro view. Micro is very much an helicopter point of view, looking into the current landscape that we are in, and what would be the prediction of the future, and what would be the prescriptive solution as we progress into the future. I'm using the big data words a bit because we cannot run away from big data and AI. The more we put big data and AI in our discussion with regard to ESG, the more we are guided, because in order to go through thousands and thousands of checkpoints of ESG, human cannot do that, and humans are very much biased and tired and exhausted, but the smart learning machine, the algorithm, can do it faster without taking any side. The problem sometimes of ESG, we are biased in our, though we have the third-party consultant and a reputable firm, but we need to bring another level altogether, which is using the smart lending machine to produce a more refined and respectable result at the end of the day without any fear and favor to anyone. So the macro view is very much looking into the description of the current landscape, the prediction of the future, and the prescription. How do we prescribe the solution moving forward for both Shariah and ESG investing? Direction, I think I would agree. We have heard interesting speech and presentation by both Dato' Yang Bahagia Dato' Khairuddin and the Yang Bahagia Dato' Omar, the CEO of Bursa, and also Eric Chia. I think just now on the valuation, very much the direction very positive and trajectory, if I can say that. However, we've compared ESG to Islamic or Sharia investing. One is faster. Of course, the ESG movement is faster than the Sharia in regard to champion the meaning and the narrative of ESG. A bit slower in the Sharia world, and I need to be open about that. And the whole reason we are having this seminar is to be open and to be frank about the landscape of our ESG. Slower in terms of awareness, the blueprint, the boardroom discussion. Boardroom discussion refers to the Sharia board discussion, year in, year out. In the last how many years, I have not seen a lot of traction in this regard. And the product rollout, the focus has been very much on the compliance sake of the product, which is good, but not good enough to look into the value-added Sharia argument with regard to a particular solar or hydro, or looking into financing the workers' accommodation, or perhaps to finance the production of product which has been implicated with the poor, workers' accommodation and health and safety, for example, that come under the social dimension of ESG. So to cut the story short and fast forward, I think we need to create more, active discussion within the Sharia fraternity, from the Sharia board members all the way to the CEO, to the CFO, to the Sharia complaint officer, all the way to Sharia research officer, so that it become a new narration. Not all the time, but perhaps we are putting the right milestone moving forward. The Paris Agreement 2015, and we have 198 countries signed for the reduction of the greenhouse. And lately, the U.S. President Biden has also included again U.S. in the whole Paris Agreement, and we have heard about China effort. 5-year plan 2021-2025 to have the net zero emission by 2060. And of course, US Biden wanted to do it 10 years earlier, 2050. And the Malaysian government, we have put our commitment by 2030, wanted to reduce up to 45% of the emissions. So everyone is moving forward to the future. So the 2050 by the two largest economy bloc of the world, and the Malaysian government as well has done the same, but Sharia fraternity are still left behind and still a bit, not giving the right response. The right response means to say a proportionate response given the current interests of the world, and that should be reflected proportionately in the narrative of the Sharia fraternity on all the discussion, the seminar, conferences, fatwa, articulation, the talent and the recruitment of the new guy in the setup. Okay. I will stop at that juncture with regard to the direction. When it comes to Sharia, I think we have heard just now. Thank you very much for the great video by Sharia. I think the Bursa, if I'm not mistaken. Of course, the Sharia has been very focused on negative screening all the way. in the last 40, 50 years in what we do or plan to do. And perhaps when we talk about ESG, is no longer about negative screening, it is about positive screening. And this is the mindset that we have. I mean, if I can talk about the mindset a bit, you know, the mindset, Shariah try to exclude what is bad, what is detrimental, what is not proper from, you know, sin activity like liquor, entertainment, pornography, weaponry, interest-based and insurance-based and what have you, which are correct. I'm not saying this is not proper, but we call it negative screening. And now we are bringing the new dimension of positive screening. Well and good. I mean, I have no quarrel about that. But and this is, for me, is a problem in itself because we tend to distinguish between negative and positive screening. I think we can push that as a matter of transition to move away from negative to the positive screening because we have not found the evidence clearly to prohibit, for example, the bad treatment of workers. We call it positive screening. We have not found evidence to say we cannot pollute the world and the water and the river and the lake. That's why we call positive screening. They are compliant, but they are not good, nice to have. And this is the mindset for me. It's a bit dangerous. I mean, I was one of them to say, well, this negative is positive screening, but I think after going through the Quran and the Sunnah to some extent, cover to cover for the Quran, of course, I cannot cover the entire hadith of the Prophet so, you know, big and so wide. I think we need to take a bold decision. There's no longer positive screening because that the water pollution, the treatment, the ill treatment of workers in the case of Tok Glove, for example, as everyone have heard, they have 11 points picked up by the International Labour Organization, ILO, and they got to address that. And all the stop have been stopped at the ports of the world, and they managed to do that. They managed to resolve all the problem, and all of them have been vetted by the international, by the consultant in UK. Now they are back to normal. So, in a nutshell, you know, ill treatment of workers is that not prohibited under Sharia? I think it is still equally prohibited. You cannot treat the workers, you know. Of course, there's no very straight line. This is haram, this is halal, but we have to be courageous enough to say, well, the time has come to look at from the method, if not from the legal judgment, from the maqasid perspective, which Prof. Akram will be talking a bit later on. But from my own research, I am very confident to say the time has come for us to move away from a piecemeal approach to Sharia to a collective thematic and compounding theme of the Sharia, and that includes so many issues, and most of them are covered by ESG, PRI, as well as SDG, as everyone is aware of. So this is my comment on the Sharia screening, negative and positive, good, but we need to move to great rather than confining ourselves to the great, to the good, you know, discussion and mentality. ESG, there are three components, as everyone is aware. E stands for environment, and that include high carbon emission, waste pollution, greenhouse gases, and whatnot. S, social, relating to workforce, working condition, health and safety concern, and G, lack of board oversight, the governance, lack of board oversights on corruption, bribery, unethical business conduct, political lobbying, and donation. I mean, the list is not exhaustive, and this is the new Sharia mindset. This is the modern Sharia mindset, that Sharia, for me, as you ask me, I don't think Sharia is about ESG. Sharia is about ESG and plus. There are many other things that ESG has not been able to include, and we as Sharia advisors to make it, of course, we don't want to be seen as too ambitious, but at least ESG should be embedded within the Sharia, and this is, all of them are negative screening and no longer a positive screening moving forward. I have another 4 minutes or so. The last few points, investing. I think investing, I think we have heard just now about sukuk, you know, investment or issuance And we are grateful to have the SC from 2014, very ahead of everyone else, to issue the SRI Sukuk framework, and followed by the tech incentive in 2016. And the data I have, as of August 2021, we have seen 18 issuance of SRI Sukuk in Malaysia. And we have heard from Yang Bahagia Datuk Omar, if I'm not mistaken just now, he has quoted about 280 billion AUM, which are linked or related to ESG. And this is quite interesting. This comes under Sukuk as well as under shares and unit trust related investment. Of course, we need to look into something beyond the Sukuk and public state companies and unit trusts, into private equity, into crowdfunding, perhaps to some extent, and government spending. Government spending is the biggest investment of the country, and perhaps we can see how can we articulate and engage with the government to spearhead the investment, the budget, the expenditure, not the expenditure, the development budget under the government budget 2022-2023. Myself, as the chairman of MAWIP, Federal Territory Regions Council, we have start talking about building new mosque and new school using the solar panel. All the parking should be covered by the solar panel, and to refurbish the old mosque and the old school, we need to go into new technology. Of course, the issue of the cost is still high because as you know, the ESG is not cheap at the moment, but it will go down a bit by bit. The issue of LCOE, the levelized cost of energy, is still the issue now. The grid parity, the cost of using the alternative energy compared to electricity is still not there. So these are the issues that we need to bring into discussion: the LCOE, the grid parity, the issue of the track record of the EPCC, the ONM, and everything. That must be discussed, and perhaps this conference can also look into other stakeholders, not only about Shariah and SC and Bursa and the financial sector, but also the other stakeholders, EPCC, the ONM, that can help a lot, and the consultant, the auditor. The last point, Mr. Chairman, I would like to add in the topic of discussion, I think we need to look into direction, the meaning of Shariah screening, ESG screening, and investing strategies. We need to add on another important aspect, which is there but not that highlighted as far as I'm concerned. The report and audit and oversight. We need to be serious about reporting culture and standard, and audit, either technical or semi-audit report, and oversight by relevant. When we issue sukuk, for example, for SRI, for solar, even for, I think Cik Azad mentioned about wakaf is something new, we need to really put the oversight. And we need also to audit not only the project, but also the EPCC, the ONM, and the everything, because otherwise we are not working in coherency. We are still working in isolation. ESG denounces the isolation or working in isolation. Everyone should be ESG in whatever we do or plan to do. I think I will stop at the juncture, given 5-15 minutes has lapsed. Thank you very much for the opportunity. I look forward to have a more interactive and insightful discussion after this session. Thank you, Mr. Moderator, and thank you all the participants and audience. Assalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullahi wabarakatuh. Thank you, Dr. Dawood. Very, very interesting. And Dato never ever, his presentations will come up with new things. And I've got a long list of questions for him. Before that, I think I'll move on to Professor Dr. Akram, who will give an insight of those models for the socially impact sukuk or bond and sustainable responsible investment sukuk. So accordingly, the models actually provide more efficiency. It emphasizes on transparency, and it also encourages cooperation and resource sharing, as well as providing an avenue to link the private corporations with their social responsibility. With that, please welcome Professor Dr. Muhammad Akram, who will basically present on Islamic finance and sustainable development instruments in the light of Maqasid al-Sharia. Please, Professor Dr. Akram. Yeah, you're muted, Dr. Akram. Yes.
Okay, sorry. أعوذ بالله السميع العليم من الشيطان الرجيم بسم الله الرحمن الرحيم الحمد لله رب العالمين والصلاة والسلام على أشرف الأنبياء والمرسلين وعلى آله وصحبه أجمعين اللهم لا علم لنا إلا ما علمتنا إنك أنت العليم الحكيم اللهم لا سهل إلا ما جعلته سهلا وأنت تجعل الحزن والصعب إن شئت سهلا. Thank you very much to Brother Zakaria, yang berbahagia Datuk Khairul Saleh Ramli, the CEO of RHB, and all the distinguished guests, panelists, ladies and gentlemen. Alhamdulillah, first of all, we praise Allah subhanahu wa ta'ala for His grace and mercy. And I would like to thank RHB for having this thematic conference in which I think it is timely for us to have, this kind of discussion when Sharia meets the ESG. And I think this topic has always been an important topic where we need to look into the bigger picture, especially when we are talking about Islamic finance, when we are talking about Sharia, what is the position of Sharia vis-a-vis ESG. I'm going to go through some of the points which I have prepared in the slides. Of course, I'm not going to go through all the slides. Perhaps I think Dr. Daud Bakar earlier on, has laid the foundation. You see what needs to be done by the Sharia fraternity, especially, and how you see, the importance of the convergence between Sharia and also ESG. And Alhamdulillah, earlier on, I think in the earlier presentation, our colleague, Brother Aizat from SC also have already mentioned about the tremendous effort that has been taken by the SC, and Alhamdulillah, I would say that Malaysia is one of the leading countries when it comes to looking, you see, into all these added value or moral, ethical dimension when it comes to finance. And I think we have the framework, we have a lot of work that has been done, and I think the challenge is how to put, all this, wonderful framework that we have into the ground. And I think it is the role of the industry. You see, the regulator played their role. And I think it is very important for us to ensure that the industry pick it up and the industry push, you see, the agenda forward. And again, RHB has been one of the institutions that is leading in this effort. Now, let me start by saying that as we know that Islamic finance industry has grown considerably over the last 4 decades, and it is one of the fastest growing segments. And if we look into the development of the Sharia aspect of Islamic finance, we have seen that, since inception, the focus was very much on trying to find a halal solution, you see, to the need of the people. People want to buy house, people want to do business, people want to, you see, embark into their activities. How do we provide the financial support? So the focus has always been, what are the suitable Sharia contracts that can be used? What are the concepts? You see, that's why we have seen that the scholars have dig into the classical book of fiqh in order to find what are the suitable tools, instruments that can be used. And I believe that to a certain extent, I'm not saying that, you see, we are done, you see, with the fiqh or the legal Sharia aspect of it. We are still developing it, but to a certain extent, in most of the cases, we are, we have found the solution, you see, the legal Sharia solution to the different aspect of Islamic finance. And now, you see, I think with the development that has taken place over more than 40 years, we are almost 50 years now, people have started asking, what is the value proposition of Islamic finance. So that's why I think in the last few years, you see, people have started talking about, I mean, this term, which is very much being popularized, the maqasid dimension of doing things. Now, what is a maqasid? See, maqasid basically are the objective, purpose, intent, and principles behind the Islamic rulings. And maqasid in the Islamic, in Sharia, is for the interest of humanity. That's why, I mean, the scholar says that Sharia is for the benefit of mankind, both in this world and the next. And anything that bring benefit, that provide benefit, and prevent harm, that is considered as the overarching or overall maqasid or objective of Sharia. And when we talk, you see, if we look from this dimension particularly, you see, we talk about ESG, SRI, I mean, all these wonderful concepts, okay? I mean, it jive very well, you see, with this main objective of Sharia, in which we know that the protection of environment, for example, it is for the benefit of mankind. And it also will prevent harm from mankind. When we talk about the social dimension, you see, how do we arrange, you see, our workforce? What are the kind of incentives that we give them? I mean, again, I mean, it is for the benefit of mankind. When we talk about the governance aspect, you see, we want to be transparent. We want things to be done accordingly. Everyone have to be accountable. And the effect of it is for the better of everyone. You see, it provides benefit. When we are talking about, you know, trying to minimize or, you know, eradicate the leakages in how we spend money. And I think Dato did mention earlier on, you see, about, I mean, this issue of leakages and whatnot, government spending, whatnot. You see, all these are for the betterment of mankind, in which it will provide benefit and it will prevent harm. So, I mean, all these wonderful concepts, you see, that we are talking about, I mean, it is very much within the purview of Sharia. That is the reason why, if you look into the definition or the scope of Sharia generally, Sharia is not only related to the fiqhi aspect. It is not only about the legal aspect of things. Okay, it encompasses the belief system, it encompasses the moral, ethical dimension. So when we talk about environment, when we talk about social dimension, when we talk about governance and whatnot, I mean, it is part and parcel of what is propagated by the Sharia as a whole. That's why I think it is not right for us to detach, you see, all this wonderful concept from the general framework of Sharia. Take, for example, you see, in conventional, I mean, you have the CSR, for example, right? I mean, CSR, I mean, it is something which is, you see, over and above, or which is considered as an optional areas in which companies have to work for it, for the betterment of the society. But the main purpose of the company is to generate income, you see, for the benefit of the shareholders and whatnot, right? But when it comes to Sharia, right, I mean, the CSR, the ESG and whatnot, you see, it is embedded within the framework, the general framework of Sharia, where, I mean, moral ethic is part of Sharia. That's why it is not right for me to claim that my product is Sharia compliant, but at the same time, I neglect, you see, the area of environment. I provide funding for companies or for any activities which might lead to the detrimental of the environment, which might lead to, you know, climate change and whatnot. It is against the very fundamental of Sharia itself, right? So I strongly believe that we need to work towards embedding everyone, as mentioned by Dr. Daud earlier on, that, you see, I mean, we are still perhaps, you know, lacking behind when it comes to enforcing, when it comes to embedding, I mean, all these wonderful principles within the general framework of Sharia. That's why I mean I'll skip some of the elements that perhaps has been discussed earlier on. And when we talk about ESG and Islamic finance agenda, I believe that, you see, with the tremendous growth that we are seeing in the industry, it is very important for us to have innovations, means or innovative ways to promote social mobility, sustainable impact to the economy, community, and also environment. And I think the fact that in some screening process, we have embedded, you see, within the Sharia screening framework, you see all these values, ESG values, SRI and whatnot. I mean, this is tremendous effort that has been done, except that I think we really need to look into the perimeter, which will need further development. See, and also in the Maqasid discussion, the scholars always mention about the three level. I mentioned it here, the three level, that is the essentials or necessity, the complementary, the embellishment. So when we come up with our criteria, whatever criteria, of course, the priority should be to serve what is considered as essential or necessities. And then we come to the second level, the complementary, and then to the third level, the embellishment, meaning that, you see, serving the necessity, take for example, when it comes to funding, anything that is clearly that it detriment the environment, for example, that one have to be avoided, you see, based on the necessity, because otherwise, I mean, the impact will be detrimental to society. But there might be certain activities, you see, that have some benefit. It might be it bring less harm, for example, it might fall within the second as well as the third category. And I think all this detail, of course, I mean, has to be discussed and has to be elaborated by the scholars. And impact investment and also Sharia compliance. Now, when we talk about innovative ways to promote ESG, the traditional way in doing finance in a Sharia compliant framework should be improved in line with the needs of society and the emergence of financial technology. That's why, I mean, it is very important for us. Nowadays, we have the big data, right? How do we analyze this data? How do we come up with a solution based on data? I think during the pandemic, we have seen a lot of, you see, uncertainties that is happening. Why? Sometimes simply because we have the data, but we do not know how to analyze the data. We does not know how to empower the data in order for us to put the right solution, right? When it comes to ESG, I think it is important now that the industry has come to level of maturity. It is very important for us to look into the data. You see, when I'm providing any kind of assistance, any kind of financing, I'm putting any guideline. All right, it should be based on the data that I obtain. And moving forward, of course, I mean, I know that if I do this, this will be the result based on the data. So I think it is very important for us, you see, moving forward, that we try to innovate and come up with something new based on the data that we have. Integration of commercial and social finance, whereby Islamic finance should also be used to mobilize, into institutionalize and empower the funds of zakat, sadaqah, qardul hasan, and waqaf. I mean, these are, you see, among the, I would say that the dotted line that we really need to connect them, because at this juncture, if you can see that when you talk about all these wonderful principles, okay, and there are some safety netting within Sharia, you see, you have zakah, you have sadaqah, qard al-hasan, you have waqaf. You see, we are not empowering, I mean, all this, you see, instrument that is available within Sharia in order for us to move forward. So I think it is time for us to empower, I mean, all these wonderful tools. You see, recently, for example, PNB and also Majlis Agama Islam Wilayah, I mean, we've come up with the waqaf, I mean, funds, waqaf funds in which, you see, I mean, those who invest in PNB, you see, they can wakaf part of, you see, their investment into a wakaf fund in which it will be empowered, you see, to, the return from this fund will be used for good purpose. This is the kind of innovative that we need to bring to the society so that we can bridge the gap between all this wonderful concept that is available in Sharia together with Islamic finance generally. When it comes to Sharia compliant, you see, I mentioned about this earlier on, that you see, we have to extend the meaning to include ethical commitment and also social orientation. Sharia requires no distinction between legal imperative and also moral obligations. Law ethics from the Sharia perspective should not be viewed as separable and should not be made contradictory in developing Islamic finance. And Islamic financial product structuring, marrying form and also substance. I think this is important. And I think this will entail the combination of the effort of the scholars and also the practitioners, right? The scholars can look, you see, from the Sharia point of view. Sometimes perhaps the exposure that the scholars have might be limited, all right? They might look from one dimension, but I think it is the role of the practitioners, you see, to come up with the data, you see, to prove that, okay, even if I agree, you see, from the Sharia point of view, I can see that there is nothing wrong, let's say, to fund a certain project. But then if you see the practitioner can assist and provide me with the data to say that, no, from the experience that we have, this kind of project, for example, it is detrimental to the society, it is detrimental to the environment, it will, enhance in creating a debt-ridden society, for example, in which, in return, it will bring, you see, other social ills and whatnot. So, this combination of Sharia expertise as well as market practitioner will really bring wonderful result, you see, in which, we can always integrate between Sharia and also ESG. Okay, so basically ESG is a moral initiative based on the belief that the company should be good. And as I mentioned, this is very much in line with the requirement of Sharia. I do not want to take much of the time. I think we have more discussion after this. I think finally, what I would like to emphasize is very much that the Sharia fraternity need to enhance themselves, you see, with what is happening in the market. And I always, believe that the mandate of the Sharia committee should also include not only to look things from the Sharia point of view, but also to look into the impact of such a decision on the society. It might be halal from the Sharia point of view, but not necessarily it is tayyib, you see, in which, you see, the result is always as what is intended. So with that, I hope I have provided my view and looking forward to discussions in the future, after this. Thank you very much. Wassalamualaikum warahmatullahi wabarakatuh.
Thank you, Professor Dr. Akram. I was a bit worried when I see the number of pages. So Alhamdulillah, you managed to within the time frame. Okay. Ladies and gentlemen, research suggests that a marked shift in the behavior of investors is actually pushing the level of support for ESG resolutions. Separate analysis by Morningstar and Alliance Advisors has actually found that the level of support for ESG proposals looks set to reach beyond or record levels this year. And in fact, the research suggests that the uptick in the level of support is being actually driven largely by the change in the voting behavior of the investors. Ladies and gentlemen, please join me to welcome Ms. Shariah to share her thoughts on the role of ESG in investor behavior change. Ms. Shariah.
Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. First and foremost, good morning to everyone, distinguished guests, panelists, and valued participants. And I would like to thank RHB Investment Bank for inviting Satuna Sunan Berhad to this RHB ESG thematic conference. And and I'm honored and humbled to be one of the panelists here and to be with all these distinguished panelists. And today, I would like to talk on the role of ESG in investor behavior change. Let me share the screen first. Okay, are you able to see my screen now? Okay, good. Alhamdulillah. Okay, let us move to the next slide. Here, as what Professor was saying, that you cannot actually detach ESG from the Islamic finance. Here, we want Islamic ESG to be part of the Islamic finance model. Development of Islamic ESG in Malaysia. As we all know that Malaysia has developed Islamic finance structure, and here where we have been now, people are looking into Malaysia as an Islamic hub and an Islamic market, and people coming to Malaysia to exchange ideas on academic or on practical issues. Hence, with this experience that we have, we can apply lessons learned from 40 years of Islamic finance into the SRI roadmap. And in general, the growth in SRI in Malaysia has been from the three main areas, that is from the developers, from the regulators, and on the suppliers, and from the demand side. But today, I will just I will be talking and focus on the demand box, and we want to focus on the investor. And as an asset owners, we want to understand what our investor wants and what are they looking in their investment. And normally, in general, investors are looking for capital preservation, growth in their investment, or income in their investment, or could be both, capital preservation and income, or any of those. Yeah, but today, today's investors are looking for more. They want values in their investment. For example, if you're a Muslim, you'll be looking for companies that do not do haram activities. So you're looking for investment that align to your faith. And if you are human rights activists, then you'll be looking for investment that have a justice element in it. Example, like you want a fair wages fee, no forced labor, you'll be looking for gender equality. And for Greenpeace people, they'll be looking at investment that protects the environment. No cutting down of trees, and they'll be looking at how efficiently they use water, and where do you dump your waste, right? So these are Greenpeace people. So they will be looking at investment they were looking for investment that will protect the environment. So with that, all these.
Shariah?
Yes.
Sorry to interrupt you. Can you because I think the slides, can you more of a view version instead of this? Because I think the audience can't actually see it. So can you just a full view?
Sorry.
Can you change the slides presentation into the full view? Will it be okay?
Okay, we'll interruption here. Sorry, I have to wait. Is that clear? Can you see now?
No, I can't.
You can.
Okay, can you unshare and reshare?
Yeah, I think I'll do that.
Okay. Ah, yes, that's better.
Okay, everyone can see now?
Yes.
Good. Okay, where do I stop? Okay, we were talking about values in investment, and we are talking about different investors look for different values in their investment, right? There's people who they want their investment aligned to their faith and to their responsibility and all that. So these all, when we're saying about talking about social responsible environment, faith and all that, these falls under the SRI framework. And why do people change in their investment behavior? Why? And let's see why what other things are influencing this investors' behavior. Let's move to the next slide. Is the eye. What these investors sees matters. So let us see what we or investors see on a daily basis. So these are pictures that investors see every day. So we watch this on TV, we watch this on social media, and we also see it on news. These are disturbing pictures from people being oppressed and children suffering and animals are suffering. This is because of change in environment, climate change due to chemical warfare, and due to forest fires and oil spill and so forth. So are we sad when we look at these pictures? So what can we do? Yeah. So are we responsible? And I'm worried. Where are we heading? Can we do something about it? And of course, when we look at those pictures, we feel guilty, right? So as an investor, we do donation, we work voluntarily at charity organization, and we do recycling at home. These are good behaviors, but is this good enough? Yeah, if you were to donate in millions or billions, I think that will have an impactful investing. But we want the investors to have to do impactful investing actually, and most investors would, if you were to ask investors, are you aware of impactful investing? Then they will say that, I don't know, I've never heard of it, and why are they coming up with these answers? Let's move to the next slide. Is it because they are not aware there is such ESG product, and they don't know how the ESG product performs, or is there not enough promotion on ESG? Let's look at the Islamic ESG performance. Here is a chart showing the performance of ESG fund versus S&P 500. And if you can see here, the performance of ESG fund has been better than the index, and they are, if not comparable, they actually beat the index. And let's look at Shariah ESG fund. How are they performing? This is the performance of our very own Satuna Amanah Growth Fund, which is a Shariah ESG fund against the S&P 500. So in this chart, if you look at it again, the fund outperforms the index. So if we talked about ESG product and performance, so ESG performance, fund performance can be comparable to the conventional fund, and even can outperform the index. Okay, according to the UN, to make all go here, I mean, we are looking at, sorry, I think I've got it. Missed out this one. Okay, here is the Sustainable Development Goals by the United Nations. And there are 17, as you know, there's 17 development goals. These are the promotion by the United Nations on ESG. So all governments in the world are promoting ESG. So, and to make this a reality, what government does is to enforce companies to meet these SDG goals. For example, like alleviating poverty, zero hunger, and having stress on good health, well-being, good education, and gender equality, and so forth. And let's look at let's look at the next slide. Okay, what does the UN says? To make all goals a reality will require the participation of everyone, including governments, the private sector, civil society organizations, and people around the world. The fight against COVID-19 is no exception. So talking about COVID-19, and that falls under SDG Goals 3, that is good health and well-being. And all stakeholders have to put efforts in making these goals a reality. Let's see what governments all over the world are doing now, okay? Okay, this is just example of a UK government giving incentives for people to buy electric vehicles. So they gave like a plug-in car grant, tax benefits, even to the extent of free local parking perks. And in Scotland, they give interest-free loan up to £35,000 when buying an EV car. Okay, so what's happening in Germany? Germany goes for a car-free day on a Sunday, and they actually subsidize all the buses and trains and trams to actually to discourage people from driving their car. And I think in Malaysia, we do have a car-free day. I think that was like for a few hours on Saturday. And we also encourage people not to use plastic bag when they go shopping. And I think in the current budget, we will also I think a government government is promoting exemption on import and excise duties and sales tax for electric vehicles. And Brusa launched the in the budget, it says that Bursa is going to launch the voluntary carbon market platform. And SC is promoting to make compulsory for public listed companies to have at least one female on the board. Okay, so these are efforts from governments and from regulators. So what are the corporations doing? What are they doing to promote SDG goals? Okay, we as corporate at Satuna, we actually monitor the disclosure that these companies have in their financial report. And this is just a sample that how we actually monitor the disclosure on the on this report. They call it a CSR report. A sampling of this to show that we actually categorize the companies to three categories. If the company just mentions in the report on SDG, but no target are given or metrics, we put there as least comprehensive, that we give them, we put in a category M. And if the company gave specific data or metrics related to the SDG goals and no quantitative target, we give them a D that's considered average. And if the company give a quantitative target specifically tied to the SDG, and that is considered most comprehensive, and we put them under Q. So there's a QDM ranking there, and here is, if you look down here, there's a sample of 5 companies that we have monitored. Example, Low is got a D for good health and well-being, and under gender equality, they get an M, and for affordable and and for affordable and clean energy, they get a Q. So let's go for the rest. Yeah, for Aviva, they get a Q for meeting the no poverty SDG goals. Good health, they got Q for good health, and for gender equality, they got a Q as well, and affordable clean energy, they got a Q. So this is sample of how we monitor companies from their strategy, company strategy and objective to the SDG goals. And but in Satuna itself, we have an in-house proprietary system that monitor this analysis. Okay, what else do we do here?
Okay, Ms. Shariah, I
Yeah.
think we're running short of time. I'll give you another minute just to wrap up. Just
Okay. Okay, this is another example of monitoring that we do in addition to the quantity security analysis. We track our funds through relative to benchmarks, and all Satuna funds as under weighted average carbon intensity compared to the index, and also how the resources of companies' resources for renewable energy sources, Satuna holdings compared to the Islamic compared to the indexes, and also on factors like how many female on board representation, and in our holdings, all Satuna funds actually beat the indexes holdings. Okay, these are a quick one, a principal responsible investment, and I would like to say that we are actually on principle 4 to promote acceptance and implementation of principle within the investment industry. I'm proud to say that today, we're exercising principle 4 of the UNPRI. And in conclusion, we all have to work hand in hand with the investors, issuers, and regulators. And of course, as an investor, we need to educate, we as the asset owners, we would like to educate investors on more on the ESG knowledge. And we have to come with product that incentivize investors to go into our product and keep them well informed, and like in the social media. And with that, I end up this presentation with this picture. and change in investor behavior can lead to a good, sustainable ecosystem. Thank you. Thank you very much.
Thank you very much, Shariah. So very impressive, very interesting in the sense that Satuna is actually moving towards the ESG proposals. And thank you once again, everyone, for the short yet impactful presentations. And in fact, while I was listening to Nuraiza's presentation, the first thing that struck my mind was on harnessing the synergy between Islamic capital market and sustainable and responsible investments. So my simple questions, it may be a layman's questions, isn't Islamic capital market a sustainable and responsible investment? So maybe Nuraiza can actually guide us in drawing the line between the ESG as well as the Islamic capital market. Or maybe some of the panel members could actually add on to what Nuraiza says.
Okay, thank you very much, Zakaria. Of course, if you look at it, I think various presenters has actually mentioned about how the Shariah principle, especially Islamic finance, actually share common underlying principle with the principle of sustainability. And if you look at it, of course, Shariah screening or Shariah compliance securities in itself can be considered as an ESG methodology that companies or asset managers actually apply in terms of undertaking exclusion from certain activities, prohibited activities or negative screening. So this is one of the strategies. So in a way, it can be considered as one of the ESG methodology. However, if we move forward, I think there are more consideration to actually be taken into account. There are demands, from various parties. Now, investor demanding what, and want to know what the companies, what companies are doing to actually prevent harm and doing good to the society. So in a sense, yes, but at the same time, there are a lot more that we could actually do to actually increase that underlying principle, as Dr. Daud has actually mentioned. It's just not about negative, but also in terms of a positive, what are the positive attributes that we can actually look at in the company and how they can actually benefit the society as a whole. This is my short answer there.
Thank you, Nuraiza. Okay, it's also interesting to note that Dr. Daud also highlighted on the bias in deciding as to whether ESG or Shariah compliant. So in his presentations, in other words, he was saying that at the times we tend to be not objective in the sense that we tend to we tend to be biased whether to go for ESG, whether to go for Shariah and this kind of thing. So I'm not posing this question to Dr. Daud, but I'm posing to Shariah as an industry player. How do you see that? How do you actually overcome that biasness? Because sometimes, as what Dr. Daud was saying, that the previous mindset of Shariah basically just the negative screening part of it. So in your parts, and then we're trying to look more positive side. So maybe upon Shariah.
Okay. Here let me say that there is parallel or there is ties between ESG and Islamic principles. Mm-hmm. Okay. So I think we have proved that there is a similarity in the ESG and the Shariah principles. And I think we have also done a study here to show that where ESG factors can be mapped out into the hadith. And for example, if you have, we mapped out the hadith according to the E factor, the S factor, and the G factor. So that's correct when we were saying that you cannot actually disconnect ESG from the Shariah principle. So for example, I give you one hadith that were hadith metrics that relates to environment on the planting of trees. And it says that if a Muslim plants trees or some sow seeds and then a bird or a person or an animal eats it, regarded as a charitable gift. So replanting trees is part of in the hadith, in Islamic hadith. And if you look at on the social side, and they have also hadiths that say that the rights of employees. They saying that Abu Sa'id al-Khudri narrated that whoever employs someone to work for him, he must specifically pay him his wages in advance. So that is related to the social part of the metrics of the hadith. And this also falls under this SDG 10, reduce inequalities. And the other metrics that we can see is on the governance side. And in the hadith, it says that when people see an oppressor, but do not prevent them from doing it, it's likely that Allah will punish them. So this, you can relate this hadith to the governance, and if you look at the SDG goals, it falls under SDG 12. So I mean, you cannot separate this, and you cannot. I think I would say that Islam commands ESG. Thank you.
Thank you, Mr. Shariah. Unfortunately, our salaries are only being paid by the end of the month. We did learn a lot from all these presentations. And as I said, while the gurus are still with us, let's take this great opportunity to get more insights from them. Okay. As we know, the 5 essentials of Maqasid Sharia are all aligned with the widely accepted ESG principles, which translates into a Sharia compliant investor being an ESG compliant investor as well. So my simple question to Prof. Dr. Akram, is the current Sharia principles applied to investments really fulfill the Maqasid requirements? Or if so, yes, how? If not, how will it impact and alter the current Sharia investment landscape? Prof. Akram.
Okay, thanks, Dr. Zakaria. Well, I mean, if we look generally, right, I mean, we can say that in general term, yes, whatever criteria that we have at the moment, you see, in general, it do fulfill the Sharia requirements. You see, as I mentioned in my presentation, you see, I mean, all these wonderful principles, guidelines, you see, to bring benefit to people and to prevent harm from them. Okay, that is the reason why we can say that, I mean, it really jives with the different principles of Sharia, you see, which is there in the Quran or in the Sunnah of the Prophet sallallahu alaihi wasallam. Take for example, you see the hadith which says la darara wa la dirar. You see, I mean, you should avoid, you see, any harm. Okay, so I mean, this is very much in line with our effort, for example, for environment, in tackling the social dimension. When you talk about the governance, I mean, all these are very much in line with the hadith of the Prophet. In the Quran, Allah says, "Wala tulqu bi aydikum ila tahluka." You see, do not throw yourself into destruction. So anything that might lead to destruction fall within the ambit of the interpretation of this ayah in the Quran. So that's why, I mean, I would say that, you know, generally speaking, I mean, it is very much within the ambit of what Sharia and also what the Quran as well as the hadith of the Prophet ﷺ teach us. Thank you.
Welcome. Okay, I'm also trying to relate to what Dr. Daud was saying about the conversion of Islamic finance and ESG investing. My question is, how important it is for Sharia funds to be considering the ESG principles in the stock selection. The inclusion of FAF in the ESG could put the criteria conversions closer to the maslahah investing. Yes, Prof. Dr. Daud.
Yeah, thank you, moderator. I think before I comment on that, allow me to comment and to add value to what Prof. Akram has mentioned just now. I think we have been trained in the Islamic scholarship to look into a specific evidence, dalil juz'i, a specific focused and structured evidence to arrive at what is permissible, what is not. And that has been our training in the past. If we don't find any evidence specifically, we ignore them and we move on. The maqasid is something more powerful than that. It's not about one evidence, it's about a basket of evidence. It's about collective, cumulative, and compounding baskets of evidence. For example, we have to pay salary on time, for example. This is very specific evidence that everyone mentioned. I was working in UK, moderator, as a cleaner. They pay the salary every week, so we enjoy very much. So weekly payment salary make a lot of sense anyhow. So one evidence that everyone has quoted is only is good, but that not that powerful. But when we come to maqasid, we look into a number of evidence about the welfare of workers. One, accommodation, safety, insurance, a daily basis or weekly basis or on-site, the uniform for the drinks, oil drinks, companies. That is the power of maqasid al-Shariah. Whereas we put in the evidence together to produce a more impactful and powerful evidence, but we don't go for that. We just still trapped in the one evidence, again, the total evidence of this is quite abnormally and irony, I have to say. I forgot your question to me already. So you were asking about infusion or conversion.
The consideration.
Yeah. I think we are still trapped in the old legacy that negative screening is good enough. There's no need to go for positive screening. That is our legacy. I understand the challenge. It's not easy to move from the negative to positive, but I think we need to be a bit courageous. We need to be a bit bold to say that perhaps from 2025, 2023, we have to put a roadmap. By then, Shariah fund must be ESG compliant as well. That will be our stand, and we cannot be so drastic. I understand the complication and the issue on the ground, market share and the preparation screening, but I think we need to take a decision by the government, by the regulator, perhaps both Bank Negara SC, if I may put a very humble opinion. We need to put the deadline as Malaysia, China, US has put the deadline for their own respective compliance. By then we need to move on to new phase, comply or face the consequence. Thank you.
Thank you, Dr. Dawud. Okay. I'm coming back to Nuraiza, being the regulator. As you know, that the Sharia screening process is reviewed and defined by the Securities Commission of Malaysia. So my question is, should the regulator be encouraging the conversion of Sharia in ESG by setting up the standards for ESGI screening tool? Because I think at this point of time, correct me if I'm wrong, there isn't any screening process for ESG per se, ESGI per se. So, or is this something best left to the market forces, whether there's a need or otherwise? Yes, Noriza.
Okay, thank you for the question. The SC has always taken on the developmental role to actually grow the Malaysian capital market. I think we have taken that role both for the overall capital market as well as for the Islamic capital market. In fact, if you look at the list of Sharia compliant securities, which was actually introduced way back in 1997, that was one of the earliest developmental initiative undertaken by the SC to actually grow ICM. The Sharia compliant, the list of Sharia compliant securities, in terms of involve establishing the methodology, which was really endorsed by the SAC, and the screening is mainly quantitative and based on information which is available in the audited financial statement. ESG screening, on the other hand, is much more complex as it is a science and more qualitative in nature. Furthermore, there are no common standard currently in terms of how do you define E, S, and G depending on the index provider and everything. For regulator to actually come out with that standard can be quite challenging as well, because this is a new area for us as well. We need to actually build the capability and understanding and also expertise in terms of developing the methodology. But that notwithstanding, I think it's good to actually have standardized ESG screening methodology. And I think as I mentioned earlier in my presentation, this is something that we have actually put in our Capital Market Master Plan 3, I think in terms of, to cater for the growing interest to invest responsibly, effort will be made to enhance investor access to Shariah compliant companies with good ESG practices. So therefore, we are looking at something, we're looking at this, but I think in what form and what I think that is still part of discussion, is that still part ongoing as well. Thank you.
Thank you, Norazat. Okay, just to add on to that, okay, you mentioned something about creating this methodology which should include financial standing, right? Okay, I've got this question. It's actually meant for Alex, who actually presented something about Mr. DIY. Now, I just want to get some views from the two scholars on the board, in the sense that, for instance, if you look through Mr. DIY, Mr. DIY borrowed heavily to pay its founders and pre-IPO investors prior to the IPO. So how ESG valuation views this? I mean, how do you see that from maybe from Shariah? Because they basically, this is more of the financial implications, but it may impact in terms of the ESG valuations. Maybe Prof. Akram or Dr. Daud can actually share your thoughts on this.
I think if I may start off, I think in-house analysts on this DIY IPO has given many responses from the technical and the governance perspective. I think everyone has their own bullet if you like to prove their point. But if you were to ask me as a Shah scholar, I'm not that comfortable, to be honest, of this kind of attitude as a person, because there is a very major breach with the intention to do that. And unless Mr. Zakaria, our beloved moderator, unless they have changed the board of directors completely, I have not seen the new lineup of board of directors. If they were the same board of directors that they used to have when they did that kind of unethical conduct, I think I'm not that. I think the Shah will come in. This is something that is a breach. Then the breach must be corrected, must be shown to be corrected by taking some positive action and measures. Number one. Number two, can we apply big data, on the behavior of this company vis-a-vis the data of the same action of the other companies of the world? They are not the first to do that. There are many other companies in the world have done that. And what has been the response of the market at large toward the same kind of attitude? So big data can give a bit of a different objective and comprehensive experience. Thank you.
Thank you, Dr. Daud. Yes.
I will concur with Dr. Daud, you see, I mean, on this issue. I mean, and I would like to add, you see, sometime in certain area, we need to ascertain based on the data, what is the limit where you should stop. You see, take for example, of course, I think the IPO case is one case. Take for example, when we are talking about environment, right? You see, some countries said carbon emission, for example, right? We need it to certain level in order for us to, sustain, in order for us to fulfill our need and whatnot. And it might differ from one country to another country. And I think this is the dynamic of maqasid, because when you talk about maqasid, it is not, you see, one model fit the entire universe. No. I mean, it might change, you see, based on the change of circumstances, you see, country, need of the people and whatnot. You see, so you need to look into the entire environment, you need to look into the entire data, the need of the people and whatnot, and come up with a solution, you see, which will benefit everyone. I think that is the important part of it. And I think this is one of the area in which we are really lacking at the moment. All right. I mean, we do have guidelines, parameters when we talk about ESG, SRI, what constitute ESG, what constitute SRI and whatnot. But when it comes into detail, applying it into detail, you cannot take the guideline that is being developed in the West, for example, you see, to to be applied here in Malaysia, because sometimes there are certain values, right, in which it is okay over there, but it is, you see, in not in compliance with Sharia and whatnot. So we need to really look into the details and come up with our own guideline, our own, you see, perimeter when it comes to the perimeter of ESG and whatnot. Thank you very much.
So to add on to that statement, you're saying that you have got to come up with a new approach and methodology. So is there a best practice when it comes to linking ESG to the intrinsic stock valuations? Well, what do you think?
Okay, you see where I'm coming from is I'm not saying that we need to come up with, we do not have to reinvent the wheel, no. You see, I mean, there are wonderful guidelines that is available, all right? We can take that, but do not take the approach that whatever is in the West, whatever is in some country, it fits our own need. No, we need to take it, we need to reevaluate it and look where we need to change, we change. And I think this is the wonderful thing. If you look into Islam itself, you see, Imam Shatibi in his book, I mean, he did mention that when Islam comes, you see, Islam does not change the entire system that was practiced during the time of the Prophet ﷺ. But then Islam look at what is good, Islam will preserve it. What bring harm to people will be changed. There might be certain areas that need to be modified, we modify it. I think this is the approach that we need to look into it. You see, so other people might have developed their own criteria. So let us have a look, you see, whatever is suitable and is practical for our environment, we take it, we apply it, whatever that need to be tweaked, we tweak it, and you see, we enhance whatever is there. I think that is the way for us to move forward. It is not we are imitating people or what, but we are enhancing, you see, and trying to benefit from whatever has been done by the others.
So shall I say that we are also looking at both ways, in the sense that we're looking at ESG to look into the Sharia perspective, and the Sharia or the Islamic capital market to move towards the ESG? Shall I say that?
I mean, it can be both. It can be both way. Yeah.
Okay.
Yeah.
So with that understanding, so Ms. Sharia, so do you think that the combination of Sharia and ESG will unduly limit the breadth of investable universe for the Sharia fund management companies?
Oh, okay. It's not, I think the word unduly is strong here. I'm not use that word. Okay. Of course, you know that in Bursa listings, we started off with 2,000 stocks and then become Sharia, there's 900 stocks. And then you go on further to ESG, then you are left with about like 45, 50 stocks, right? So definitely it will, reduce the stocks in the universe, but that doesn't mean it's bad. When we go through many filters, like in our investment process in Satuna, we have incorporated the ESG process into our investment plan, which means we have integrated ESG into the process. So what we do is, first is Sharia filter, second is the financial filter, third is the ESG filter. So with that, you will have a reduced amount, but remember that quality doesn't mean, big quality doesn't mean it's good, right? I mean, quantity doesn't mean it's a big amount is good. So you may have a smaller amount, but these are highly quality stocks. Highly quality stocks means that when you go through the ESG process, you already screen the haram activities, and then you have screen on the financial side, low debt companies, sound performance, and on top of that, you go through the ESG factors screening, which actually added value to the stocks, which means that you can actually know what is the future investment going to look like, because you're looking at their strategy, at each company's strategy. So this kind of portfolio actually will make you pull through all crises. And this has been proven in the recent pandemic. where stocks with low debt actually shines in a pandemic situation or in a crisis situation. Thank you.
If I may interject, Zakaria.
Yes, sir.
Okay, I think I would agree with Shariah just now, and I would like to add another element that I think we need to send across a clear message to everyone in the market. I think because otherwise things are not moving towards in our favor. To be honest, our favor means ESG coupled with Sharia at the end of the day. And I think we have done that for SC screening a few years ago when we have migrated from the core activity screening to core activity plus financial screening, balance sheet screening. We give them about 2 to 3 years to prepare themselves to be familiar the impacts of the financial screening in addition to the core activity screening. And that has helped a lot everyone, CFO of the company and CEO and board of directors to be aware that things are going to be different after 3 years from now. I think if we can do that, I think the companies, because they need the Islamic investor money, Tabung Haji and EPF, you can put the name now, and some other investors. So by doing that, I think we are more structured, by giving them time to align themselves toward ESG. And by doing that, perhaps, we expect 30-40% will be dropped, can come back on their feet and can be compliant under ESG, at least 50% of that would be great. So this is a kind of a communication narrative we need to do from the top down to prepare everyone, Sharia-wise, taxation-wise, companies-wise, regulation and discussion and all the intermediaries to make this a reality for Malaysia. If not now, perhaps 2025, 2028, what have you, but we need to put some direction to the country. Thank you, Zakaria.
Just to add a little bit more, Zach, I think I would love to see perhaps 3-4 years from now, right? I mean, we do not distinguish between, the financial screening, activity screening with the ESG screening, meaning that when we evaluate a particular stock, for example, it is a holistic evaluation and we come up with one ruling. Let's say if there is any defect when it comes to the ESG screening, we can strictly say that, well, I mean, this does not comply with Sharia. Even though it might comply with the financial screening, activity screening and whatnot, but if it does not, because at the moment, I think the approach is very much, okay, financial screening pass, activity pass, but when it comes to ESG, there might be some concern over it, but still we classify the stock as Sharia compliant. I would love to see that moving forward, any of these criteria, it does not comply, we straight away classify it as non-compliant. Hopefully, I mean, that will happen in the future.
Inshallah. Thank you, Dr. Akram. Okay, I'm quite excited when Dr. is saying that the ESG is currently coupling with the Sharia finance. Okay. And I also tried to relate with what Prof. Akram was saying, that marrying the form and substance. Now, more often than not, we say that substance over form, form over substance. Now you're telling us that you are marrying, getting this couple to get married, and then you're trying with the form and substance you mentioned in your presentation, Prof. Akram. Prof. Akram?
Yeah, I mean, as I mentioned, we should not detach between the different criteria that is in Sharia, right? I mean, it is very important for us to see it as part and parcel of the ecosystem of Sharia itself, right? I mean, why must we decouple it? When it comes to ESG, okay, I mean, we have, yes, I mean there is the criteria and whatnot, but when it comes to evaluating the entire universe, okay, we detach between one and another. So that's why I think, it's, for me, moving forward, I'm not saying now, perhaps, I mean, we need to prepare the market, you see, for the future. So perhaps, I mean, moving forward, it is very important for us to put this into people's mind that ESG is not something which is optional, right? Moving forward, it will be embedded as part and parcel of the Shariah decision, you see, and the Shariah decision will be based on 1, 2, 3, 4. I mean, if it comply with all these criteria, then only we can, you see, comfortably say that it is Shariah compliant. I think that is my view. Perhaps Dr. Daud wanted to add.
I cannot agree more with you. I think we need to put the roadmap to make it happen, because otherwise, great idea will become irrelevant because we have not put the right policy to support the great idea. Thank you.
Thanks.
Okay. I need to come back to Ms. Shariah. You're saying that, Ms. Shariah's point in the sense that you're talking about the quality versus quantity. Yes, the size will be much smaller as compared to previously because of this Shariah screens kind of thing. But let's look at the quality in terms of the profitability. Let's look at the sustainability over profit. For some investors, this, of course, as I said, this will limit the investment universe, considering the percentage of the products is still low. So Dr. Daud, again, I need to ask you, how do we actually address that?
Well, I'm here to take easy question only. I mean, when it comes to profitability, sustainability, we need to have the data. I think I'm trying to compile my own data, and the data seem to be supportive toward the end of the day now. I mean, compared to 5 years ago, the cost of the installation of solar panels quite expensive. And I mentioned about the issue of the LCOE and the grid parity, the cost of building up solar panel divided by the production of the electricity over how many years compared to the existing coal-based power plant is still not comparable in terms of cost, in terms of the bottom line, and that relate to the profitability. As you know, the cost is higher than the tariff that you are getting from the off-taker, from the government and the like. So and people are talking about how to cut costs in terms of O&M, EPCC, in terms of land involved by the government. So we need to, I mean, in the next few years, we need to engage with the ecosystem, with the stakeholders to bring the cost lower and lower. Of course, the technology will improve. I think they were saying after 5 years, the solar, for example, will be very much neck to neck to the fossil based, power plant, and that will be the tipping point, if you like, the tipping point for the environment, or to the healthy, the green economy to pick up. As we speak, I need people like Shariah. I think she knows, she saw all the data every day, day in, day out. We need to do a lot of soul searching, if you like, profitability versus sustainability versus proportionality that Prof. Akram mentioned. We have to be proportionate in terms of the location. We have to balance between the green movement and the grain. We need to produce new food. If we don't allow people to cut the trees and the jungle and to cultivate the palm oil can produce 100 and 300 sub-products, vitamin and this and that. So we need to balance between the green and the grain, because we need to produce the food for the people in the whole syllabus. That's why Shariah might be a new enabler. So I think short of time, short of words, I wanted to believe that Shariah could be a new enabler, and perhaps the word convergent after a few years from now is no longer relevant. So we need to find a better word, that Shariah is not only converging, but Shariah is also enabler ESG. So perhaps we can have the ESGS as well. And as it becomes very much product for all, non-Muslim, Muslim. So that will be our fight at the end of the day. So we have ESGS. That will be my dream, Zakaria and other of the colleagues.
Yeah, Dr. Daud.
I think it's just like, when you talk about ethical finance, it is very much synonym with Islamic finance, you see.
Yeah.
So we would like to see, I mean, that kind of, you see. And just to add a little bit what I have said, that I think the other dimension that we really need to look is on, I mean, how do we educate people, especially I think in our country, when we talk about the awareness related to ESG, perhaps especially among the common people on the street, you see. I mean, we really need buy-in for the critical mass in order for us to push the agenda forward. Yes, I mean, we focus on the investors, I mean, the institutional investors. I think institutional investors, generally speaking, I mean, you to look at EPF and other, I mean, they more or less, I mean, they are already into it already. They are talking about it. I mean, there are a lot of awareness that they are looking, but we really need to go to the retail investors. I mean, we really need to go to the street and create awareness among people. I mean, if you look into take for example, I mean, we have the recycle movement. You see, still, I think we are, you know, half cooked, I would say that. You see, it is not really taking out, even though there are some effort by the government and whatnot. But when you look around, you can see that people still throw their trash in the bin which is allocated, you know, for recycling. You see, I mean, people still don't have that kind of awareness and, you know, the, you know, courage for them to say that, hey, well, I mean, we are doing this for the future generation. I mean, we have to really do it, you see, for the good of the future generation. So this is the kind of thing that perhaps, I mean, creating more awareness, you see, to the public at large, you see, so that there will be demand. So when there is demand from the public, I believe that all the institution that is providing the services will also toe the line, you see, and also then only I believe that the agenda will be pushed forward. It will be easier for us, you know, to move forward on this agenda.
Well, thank you, Dr. Akram. I'm actually relieved when Dr. Daud has keep on saying about data. So in other words, I am actually on the right track. I've left Sukuk, I've left ratings, now on a big data. So actually I'm on the right. Okay, just a little bit on the in terms of the industries. Okay, Islamic fund industries have not been able to capitalize on the growing global interest in sustainable investment, despite the parallel. So, Nuraiza, why is this happening? I believe that's, of course, one of the reasons could be, as what Prof. Akram was saying, is on education, on awareness. So, from the regulator's perspective, how do you see that? Who should actually champion it, the industry or the regulator?
Well, I actually beg to differ because I think when we first started, you know, in terms of having Islamic funds, that is considered as part of ethical funds as well. And therefore, in terms of, you know, our inability to actually capitalize on the growing global interest in sustainable investing, it's not happening. I think on our side, we have taken a lot of initiative to actually put in place, like I mentioned earlier, in terms of how we actually try to actually harness the synergy between ICM as well as SRI to actually create an effective SRI ecosystem within the capital market itself. Starting from you know, the launch of our Capital Market Master Plan 2, which we had already set up what are the roadmap that we want to actually take. You know, we have introduced many initiatives, and one of them actually on the SRI fund guideline. This is basically to increase and offer more SRI fund and attract SRI investor as well. And also because I think SRI ESG is still relatively new, at least in Malaysia. So people are trying to actually understand, but you know, I think over the past few years, I think there has been growing awareness in terms of ESG, SRI fund, and the different names that you actually accord them. Even in Malaysia, currently we have about 30 SRI funds, which are classified as SRI fund, and 12 of them are Shariah compliant SRI fund. So in a way, the take-up is quite good as far as Shariah and ESG is concerned. There are demands for this Shariah ESG instrument or funds. I think many of the fund houses are also establishing, ESG Shariah funds. I'm sure Satu now also is one of them. So to say that we are slow, may not be quite right, because I think in terms of putting in place the necessary framework, in terms of regulation to regulate the offering of such fund, we also need to look at the disclosure. What is ESG, what is SRI, to actually avoid greenwashing, because this is a real concern. At the ISCO level, where we are part of the Sustainability Task Force, they actually look at all these issues from the issuer perspective in terms of how accurate is the disclosure from the data provider as well in terms of your methodology. How do you actually compute and arrive at that methodology? How transparent is that methodology? Because different providers provide different methodology and different screening as well. So this is being discussed at IOSCO level. From the asset manager's perspective as well, how do you actually make disclosure to investor as far as your SRI fund, SRI investing? So there are a lot of concerns surrounding this area as well. So therefore, it's not quite straightforward in terms of, trying to actually attract, trying to actually grow the ESG market as well as Shariah compliant fund as well. So there are many factors, and I think Malaysia has taken, few initiatives to actually try to harness this, industry together. Thank you.
Sorry for my ignorance. I've been out of the country for ages, and I've lost track of the numbers. Okay. I'm coming back to in terms of the profitability, because there is a myth, or rather belief, that ESG and Shariah nature of investment are within the defensive portfolio, which means less profits. So how far this is true for Shariah, and how do you actually educate, back to education, how do you educate and remove this mindset?
Okay, thank you for the question. I refer to my slide that I had earlier, where we actually showed, we did a back testing. Okay, we did back testing for the last 10 years, where the Shariah ESG fund actually outperform the index itself, the Shariah just now you're using an S&P 500 index. So I think it's just a myth that people out there thinks that the Shariah ESG fund do not perform, and a lot of people say, oh, because the profit is low and not. But you must bear in mind, by doing ESG filtering and all that, it attributed to better operational performance, because you are actually the governance are much better, and prudent utilization of leverage. We don't go for companies that are highly debt. We only go for companies that are low debt, and the cost of capital is actually lower, because if you're a bank, you will lend out at a lower rate to an ESG companies, so that will lower their cost again. And lower investment risk, meaning that chances of default is lower. So these factors will all lead to higher margins, and it will end up with a profit. Thank you.
Okay, thank you very much. Okay, speaking of indices, ESG index is designed to measure the performance of companies demonstrating strong environmental, social, and governance practices. And at this point of time, we have this FTSE for Good Bursa Malaysia Index, which is the closest where the Shariah funds can actually rely on. So my question to Nuraizat, is there a need to create more indices to best reflect the ESG layering the SRI or Shariah investment?
Well, I guess, Bursa Malaysia and FTSE Russell has recently launched the FTSE for Good Shariah Index to meet the sustainable and Shariah compliant investment needs. Of course, it's good to actually provide options, so you can actually create different products based on those indices. But at the same time, as Shariah mentioned earlier, do we have actually enough pool of companies to actually create those indices as well. Currently, we may not actually have enough pool of companies which feel the Shariah compliant and ESG criteria. Therefore, for you to create various index as well may be quite challenging in a way. But I think overall, it's good to have option for the investor as well as the fund managers as well.
Thank you very much. Okay, I think I'm trying to look from the industry perspective. I just want to check with Ms. Shariah. What are the key differences between managing a full-fledged ESG fund or Shariah ESG fund or just a pure Shariah fund? How do you see that? Is there any differences or how?
Yeah, I think the answer is the same. Like, if you're like I was saying earlier, that for a Shariah funds, there will be a bigger universe. Well, if you're doing an ESG, Shariah ESG funds, you will have a smaller universe. So in a way, it will not have any big impact being having a small universe. As it also depends on what is your AUM target. Let's say if you have AUM of below 300 million, it's fine to have 20 stocks in your portfolio. If you have a bigger amount of AUM, then you will still have 40 to 50 stocks to choose from. So there's ample to look at. And it's actually is the skill of the fund manager when they look at this portfolio. Thank you.
Thank you very much. Okay. Earlier, you spoke about how ESG impacts the behavior of investors. And you were once quoted as saying that you wanted to build investors' trust in Islamic and ESG investment performance, as many investors still think that Islamic investments tend to underperform their conventional counterparts. So my question again to Puan Shariah is that what are the challenges that your organization is facing in promoting Shariah ESG funds over the years? Was there any slow take-up rates, and how much effort been put in terms of marketing to convince investors, and how do you see the acceptance, especially post-global financial crisis?
Okay, actually, there's no, big challenges for us. Okay, the investor is a global. Investors can be in America, in all over the part of the world. So as an investor, you may want to look at you may want to invest in North America market, or you want to look at a global market, or you want to look at a regional market. So and they have stocks to invest there, right? So and then again, it boils down to the performance of the funds. So as we have mentioned earlier, we have done back testing, and we have proved that our funds perform. Example is our ICD-GSF fund performance has been in the double digit. So in 2019 we were doing like 23%, and now as to date we are already in the double digit figure. So is our Amanah Growth Fund. Our Amanah Growth Fund has been performing all the way, I think, double digit for the last 30 years. So it has proved that this Shariah ESG funds perform better than the benchmark, or is comparable to the benchmark. Like I said, we don't have much challenges in that sense, because in whatever investment that you want to do, you ensure that your fund performs. Thank you.
Okay.
Zed, I think there is one question in the question and answer section, which says that when it comes to ESG and Shariah, which come first? If I can just take up this question, perhaps I think throughout our discussion, we have already highlighted. I mean, the current approach is that, I mean, we look to Shariah first, you see, and ESG is some sort of an added value kind of things when it comes to looking into the compliant aspect. But moving forward, As I mentioned earlier on, that what we are looking is that, see, we do not differentiate between, the different criteria of screening, and hope that when we declare it as Sharia, it is Sharia which have integrated ESG, SRI, all this value within the Sharia assessment in order for us to come up with the Sharia decision. I think that is my simple answer to the question that is posed. Thank you.
Dato, would you like to answer that question? As in, what comes first, ESG or Sharia?
Well, it depends. If you're asking me as Sharia advisor, I can be a bit different from Dr. Akram. I will go for Sharia first because ESG is still developing, still taking the shape, and we are still progressing. But if you ask me about the futuristic approach, I will go for ESG come first because by then Sharia is always inclusive in the ESG. So as we speak nowadays, we cannot force the market. Market will determine. We urge them to consider Sharia and ESG together, but this is not that happening as method of preference, unless Zakaria and my other esteemed colleagues, we have read that some of the GLC, they have their own internal policy. They can put aside some of their portfolio, let's say 5%, 10%, whatever that would be, to go for ESG, sukuk-wise or portfolio-wise in terms of public listed company. That would be a good move, as Malaysia has been leading the Islamic financial market for the last 30 years by supporting our industry. Perhaps GLC could do the same thing by putting from their board of director, internal policy that they need to support the ESG up to whatever percent year in, year out. So that can give the pressure, good pressure to the for the companies to be compliant to ESG. So it's not easy to answer that question. We don't have integrated ESG Sharia at the moment. Things are still floating, but moving forward, only one answer, that is ESG, and that ESG is already embedded with Sharia by then. Yeah. Thank you.
Okay, before I move on to the next question, maybe for Shariah, because we have heard from the scholars, let's hear from the practitioners, as in like, which comes first, ESG or Sharia?
Okay, I think I've answered that question earlier. It's in our investment process, Sharia comes first, and then it's financials, and then it's ESG filter. So that's how we have our investment process in place, and that we've been using it for the last 30 years. So, and going forward, it'll be the same. Thank you.
So Sharia comes first because your Sharia scholars ask you to do so, or Sharia comes first because of the importance of Sharia?
Oh, okay, like we say that Sharia commands ESG. So I put Sharia first. Thank you.
Thank you very much, Ms. Sharia. Okay, back to Dr. Daud. You're saying about the future. Currently, you're looking at it, Sharia, then and in future, inshallah, you'll be looking more on ESG. So do you think that the years ahead will be easier to actually promote ESG funds by virtue that everybody tends to understand what the situation, especially looking at those and also to promote better living standard than the funds that purely focus on profit maximization? How do you see?
Yeah, I think I believe in the world movement, because the world can change the world. The world movement can change the way we do things. And you take the green bond itself, 2005, only 50 billion being issued in the market. Moody, for example, forecasted issuance of $650 billion for this year, 2021, which is an increase of 32% from 2020. So year to year is 35% increase. I think if we play that mathematics in the next 5 years, I think by default or by design, ESG would be the main focus of the banks, of the investor of the world. And if the economy of the world like China and US and Japan and perhaps India a bit later, and Indonesia, now they are one of the biggest Islamic ESG players in the world, put them together, I think I would say the ESG and Shariah would be a very natural fit, a good couple to marry and to settle down as a husband and wife from that perspective. And that would be the dream of the world, not only Shariah world. And by doing that, I think naturally, when we talk about ESG, Shariah is included, but the only problem is financial. In the last seminar with the UK-based company, it was on air as well. I was mentioning that we need to address the ESG community as well. We need to put the pressure on them to exclude financial, because financial is not ethical. Financial for interest is not ethical. It's against social. I put a very strong voice in that conference. They asked us to look into ESG. Fair and enough, but we are asking them to exclude the financial, because financial is again the teaching of religion, Judaism, Christianity, and whatnot. And we have to put a very strong, fight, quote and unquote, to exclude the financial, which is interest-based, and I think we can marry faster. Thank you.
Thank you, that's the Doctor. Dr. Akram, would you like to add on?
Unmute.
Yeah, unmute, please.
All right,
You're
sorry.
muted.
Sorry, yeah, okay. I think I would totally agree, you see, with Dr. Daud. And on the other hand, perhaps I think it is also imperative on us to encroach into the conventional space and think on how we can, leverage on the conventional space. As we know at the moment that the biggest share, you see, in the financial market is the conventional share. So if we put, let's say, some figure put 1, 2, 3% of Islamic in the global market, you have more than 90%, which is conventional. So how do we tap into the conventional market? And I think with the combination of the different elements in Sharia, it will be appealing not only to Muslims, but also to the non-Muslims. So this is the opportunity that, even though it might be very challenging, but I think, you see, with the values that we are holding, I strongly believe that we can do it, and we can appeal to more investors to come into the space.
Okay, I'd like to actually relate to what Dr. Daud was saying about getting married, because I think it's very important to get the blessing from the parents, right? So in this case, I think we need to get a blessing from the regulator. So, Norazan, from the regulator's point of view, do you think that the industry should be focusing to promote, market, and grow the ESGI that is having the best of both worlds going forward?
Well, the short answer is definitely yes. The industry, the Shariah scholar, as Dr. Daud mentioned, we as regulator, we have already put foundation. We have already put the regulation. We have already put various initiatives to actually harness the synergy between SRI as well as ICM. So it is left to the industry to actually take advantage of what we have actually put in place. Moving forward, we launched our SRI roadmap and to actually map up our strategies for the next 5 years in terms of broadening the issuer base, widening the instrument, SRI instrument, and also putting in place the internal culture and governance, information architecture, as well as broadening a range of issuers, under the 5F strategy. So definitely as a regulator, we want to see a lot more integration between Shariah as well as SRI. And moving forward under our CMP3 as well, we have actually taken that into consideration. I think we go beyond the corporates. We are also looking at, small and medium enterprises, because normally they are left out from the capital market. They are left out from this, big boys club. Because if you look at SME is also considered part of inclusion, also considered part of the ESG, Shariah as well. You want to have the financial inclusion so that everybody can actually have same or better access to financing. So, you know, our big boys are taken care of, and they know how to take care of themselves. So at the same time, we are also moving forward to look at all the smaller enterprises, how they can actually tap the capital market, how they can actually, you know, utilize the various infrastructure within the capital market, and how we can actually make it easier for them to actually raise fund within the capital market itself. So definitely, you know, it's not only industry, but also regulator as well. We will have to work hand in hand to actually grow this industry together. As we have been doing that to actually grow ICM, Islamic finance, I think we also need to actually do that to grow ICM and sustainability and Islamic finance together to chart Malaysia for success in the future, like Dr. Daud mentioned earlier. Thank you.
Thank you, Nuraiza. Okay. Since you are basically agreeable that we should focus on this promotion of ESG and those kind of things, I would say that my last questions, which I've always wanted to ask this, should the government incentivize the ESG corporates for the compliances? Would a lower tax rate would be the main catalyst for corporates to spend more on addressing the sustainability issues?
Well, I guess, you know, sustainability is no longer a trend. It's part and parcel of life. So that has to be actually embedded within that corporates. You know, if you have good business practices, good, you know, ESG practices, then a lot of investors will actually come in and you will actually see the result in terms of your market capitalization, in terms of increase in the value of the company as well. So this is similar to the Islamic finance as well. When we first started, people actually see the value of it. If I actually issue Islamic instrument, then I will get a wider investor base in terms of my pricing as well, will be very competitive. So similarly for ESG, we can no longer use tax as incentives to actually, you know, encourage people to actually comply with the standard. They themselves have to actually take that initiative to comply, because a lot of SRI funds coming into the market, even our institutional investor, EPF, QUAP, Kazana, they already signed with the UNPRI. So in all their investment, they will look at the sustainability aspect as well. There are a lot of asset managers as well in Malaysia, which have actually signed to PRI, UNPRI. So they will be looking into the sustainability aspect as well. So in terms of encouraging company, they have to look at the value of that. I mean, we have seen cases of Top Glove and many other companies in terms of bad labor practices, how they affect the company's business as well as their share prices as well, just within 1 click of time. So I think you know, moving forward, tax incentives should no longer be used to actually entice corporates. I think government also is not in the position to provide any tax incentive given the physical condition, and also Malaysia being a part of you know, OECD in terms of foreign on harmful tax practices. We also have to be mindful of this tax incentive as well, because we want to make sure equal treatment in terms of taxes for all companies, all corporates, whether they are local as well as foreign company as well. So this will be my answer to your question.
Thank you, Nuraiza. I think, Dr. Daud, you're trying to say something. You're excited about the tax incentives?
Who is not interested in incentive? Everyone. But I would agree with Aizat. I think we need to play the balancing act to balance the compliance to the international standard OECD, at the same time the requirement on the ground. Government is always intelligent enough to use this card when they need to use the card at the end of the day. So I mean, yeah, but there could be more than tax incentive to promulgate the ESG in our context. At the state level, there are many incentives given to the new players. I would like to bring in the issue of, you know, I think we need to, from Shariah perspective, Takram and I, we need to do more research, because ESG is very much the outcome of the Western civilization. We need to create our own version, and one of the versions would be the employment, you know, vertical, because after PKP and the pandemics, I think we are stuck with the social, yes, important, environment important, and government important, but people on the ground, they need employment. Perhaps the employability would be another vertical. The more the company provide employment, the better they are in our radar, because employment is the key to everything. If people are not employed, don't talk about governance and social and the other one would be the environment. So I think this is something that the thinking process should always be, generating employability or the employment opportunities would be one of the key element. Perhaps come under social. I'm not so sure. I have not checked the PRI in detail, but if that is covered under PRI, under the social, then it would be great, because that is something missing. As the Western moving towards a capitalist system, we need to go for something that can bring good thing to the people on the ground. People need employment badly as we speak.
And I think perhaps,
I think the tax incentive, if we were to play that card of that incentive, should be tied to the employability of our citizens, our people. Thank you.
And I think post-COVID, perhaps, I mean, we really need to relook at the entire framework that we have, whether, because most of this framework related to ESG and whatnot has been developed, I think, at the earlier stage, I mean, before the pandemic. So what are the priorities? I mean, I think this is one of the important elements in Maqasid. You see, when we talk about Maqasid, what are the priority of the people? Yes, I mean, we need to go for ESG, but there might be other priorities. You see, so we need to give a priority, as mentioned by Dr. Daud. I mean, people need to eat, people need to work, people need to earn. You see, I mean, if they do not have the means, you know, to buy food, then you see priority should be given to them. You see, and still, I mean, we can work, you see, within the ESG framework, particularly on the social aspect, because I can see that when we discuss about ESG, the emphasis is very much on environment, perhaps on governance, but when it comes to social, I think this is one of the areas that we really need to look into it. And post-pandemic, I mean, the social dimension, you see, we really, you know, we really need to study what is the things that is needed in the society and what are the priorities that need to be given. And I think everyone have to work from the government, you see, I mean, the stakeholders, the industry and whatnot. We really need to, you know, look into the framework that we have in order for us to move forward. Thank you.
Okay, thank you, Dr. Akram. I think time is against us. I think to give an opportunity to the audience, I would like to open the floor for question and answers. You can write your question at the question and answers, and I'll try to post it over to the respective panel speakers if you have any specific panel speakers to talk to. Yes, the floor is yours now. Any questions so far? Any questions from the floor? Okay, I've got a question here. It's asking, I think, specifically to Prof. Akram. Is awareness towards ESG compliance funds a threat to Islamic Sharia finance? If not, how does it complement each other? I think it's been explained, but I suppose they need more clarification. So, Prof. Akram, maybe you can share your thoughts on this.
Well, I always believe that, you see, I mean, there is no conflict. I think as we have mentioned in our discussion, see, there is no conflict. Therefore, I don't see it as a threat. I mean, if you're talking about conventional space, perhaps to a certain extent, there might be, you know, some kind of concern over there. But when you're talking about Islamic space, then I would say that it complement each other. You see, and as I mentioned earlier on, that we need to look into the opportunity that we have, especially in the conventional space. How can we integrate between, the good thing that is being done in the conventional, you see, and try to pull them, okay, and tell them, okay, you need to add, this Shariah component in order for your universe to be wider, meaning that you will be catering for the conventional investor as well as for the Islamic investor. So I always believe in, kind of reciprocal arrangement, but of course, without compromising on our principle. Of course, as in Sharia, we do have our own principle. We stick with our principle, but at the same time, you see, there is no harm for us to always, try to find whatever opportunity that is out there for us to work together with in the conventional space as well. Thanks.
Thank you, Prof. Akram. Anyone else want to add on to that?
Someone raised hand. I think there is someone who raised hand, I guess, from the attendees.
Okay. Can the person who raised hands ask questions or? I'm from the old school. Sometimes I'm get confused in terms of this technology.
I think maybe mistakenly it's not there now.
Okay, okay, great. Okay, while waiting for the next question, I just want to bring back to Dr. Dawood's presentation. So he was saying that we have to change the mindset. So we're talking about the screening from negative to positive. And I like the point that he says something like, let's look into the ESG plus. So can you basically share your thoughts on the pluses with us? We're waiting for the next question from Dr. Dawood.
Yeah, I think the bandwidth of doing good for the people, for the planet, for the ecosystem cannot be limited to three important vertical, E, S, and G, is that right? But to start off, people are comfortable collectively in Paris, Kyoto, and some other accord that they are okay with the SDG. We have 17 SDG, we have 3 under the ESG, we have 6 under PRI, for example. This is plus. We need to develop, and perhaps we could have our own national ESG, our own Malaysian ESG. ESG is not meant limited by 3, but it could be added some other vertical. So this is the whole idea of I'm trying to portray and argue and advocate. We cannot be limiting ourselves to only 3 or even 5. Even Maqasid al-Sharia cannot be limited to 5. In my forthcoming book, I have argued for 30 vertical of Maqasid al-Sharia derived from the Quran based on the big data analytic of the Quran. At least there are 30 vertical that can make Sharia more elegant. 5 cannot make Sharia elegant. It can make Sharia naive and very underperform, if you like. So we need to add on to make Sharia elegant and to make our financial sector elegant as well. That was my hypothesis of plus in my articulation.
Okay, thank you, Dr. Dawood. I think, as I mentioned earlier, we're running short of time. So I think before we end the session, I'm going to allocate at least 1 to 2 minutes to each and every panel speakers to basically share their thoughts in terms of the direction of ESG, or something related to ESGI per se. Let's start with Mr. Nuraiza.
Well, this is...
Nuraiza?
Yeah, sorry. Well, I guess ESG, ICM, Sharia compliant, we can no longer, ignore them. Will be part and parcel, will be convergence. So moving forward, will be convergence. Talk about doing good, preventing harm, that will be part of the entire ecosystem. That's why in the Capital Market Master Plan 3, we talk about stakeholder economy. It's no longer about shareholders, it's about stakeholder. how you do businesses, which will benefit the entire stakeholders within the community as well. So this is something that we look forward to within the next 5 years, how we can actually develop the ecosystem further and how we can grow this segment together with the industry as well as Shariah Scholar and other players as well.
Thank you. Let's hear from Dr. Daud.
Yeah, thank you very much for the opportunity to be on the center stage of the discussion. Let us, create the legacy of the future by opening up our mindset to believe that Sharia is superior to the other value system, but Sharia should be flexible enough to put the right strategy to embrace the new theme like ESG and SDG. Sharia cannot be superior by saying they are superior. Sharia should be a bit humble to embrace the new theme of the world, which are in sync with the Sharia. Thank you very much.
Thank you very much, Prof. Dr. Akram.
Okay, thanks again to the organizer for giving me this opportunity. And I think my last word is very much, we need to do more in order for us to create awareness among the people. Because I think at the end of the day, we need to educate people and we need to, bring the message across so that people can see that ESG is something which is not an option for them to take it, but I mean, they have to embrace it whether they like it or not. So once we get the buy-in from the people, you see at large, the different stakeholders that we have, then only I believe that we can really push the boundary of this wonderful concept. Thank you very much.
Okay, last but not least, Ms. Shariah.
Thank you to the organizer for having me today. I think we would like for the awareness on ESG in Malaysia to increase, right? And we also want the ESG disclosure to increase as well. So we want companies to put their targets and to follow through. And at the end, we also would like to see a bigger, diverse portfolio, investable universe where we will have, which will reflect on the performance of Sharia ESG funds. But at the end of the day, I would like to see there's no labeling of Sharia ESG, so that when an investor invests, they invest because it's a value investing. So that's what's happening in America now at Satuna Capital. 60% of our clients are non-Muslim. So it's because they invest, it's because of value investing. So, but in actual fact, the whole process is a Sharia ESG process. Thank you.
Thank you very much. Alhamdulillah, we have come to an end. On behalf of the organizer, I would like to thank our distinguished panel speakers for being able to be with us, to share their thoughts, and to basically entertaining all my questions. And also at the same time, I would like to thank RHB for inviting me to be with my gurus, whom I've already missed them when I was away. So on that note, thank you very much. Wabillahi taufiq wassalamu alaikum wa rahmatullahi wa barakatuh. And back to you, Nabina.
Ladies and gentlemen, please join me in thanking our moderator, Encik Zakaria Uthman, and our panelists for that highly engaging and insightful session. Ladies and gentlemen, we have now come to the end of RHB Investment Bank's thematic conference, When Sharia Meets ESG. Before we end, I would like to remind you that this forum is CPE accredited, and to qualify for the 5 CPE points, please complete the evaluation form at the end of the webinar and pass the assessment test with 100% passing marks by the 5th of November 2021 before 11:59 p.m. You will now see a poll being flashed up on your screen. We would appreciate it if you could just take a minute to tell us what you think, because your feedback is valuable to us. And we will use this information to further improve our future events. If you would like the full list of the ESG and Sharia stock picks, kindly select yes for the third question in the poll, and our team will get back to you. On behalf of the RHB Banking Group, thank you once again for taking the time to participate in our webinar today, as it would not have been a success without each and every one of you. We hope you have a great week ahead, and we hope to see you at our next virtual event. Thank you.
Thank you very much.
Thank you.
Thank you very much.
Thank you, everyone. Pleasure.
Okay, thank you.
Dr. Daud, Dr. Akram, Shariah,
Okay.
Zakaria.
Thank you.
All right.
Sama-sama.
Thanks,
Thank you, everyone.
everyone.
Okay.
Azad.
Assalamualaikum.
Bye.
Good luck.